No. All right, let's give it a moment or two. I know we have some other colleagues joining. Let me stop sharing. Hopefully you can all see. I'm gonna hunt down my friend. Hopefully he can join us. There we go. Mr. Jeremy has joined us as well. Well, yeah, I'm going to put you back to attendee until your panel, if that's okay. All right, Jeremy, good to see you. Good day, everyone. Let me start off. A very great day to you all. Welcome to all of our attendees to the latest Wall Street Blockchain Alliance public event, The Coming Age of NFTs. This is going to be a fascinating discussion with all of our colleagues across the crypto asset ecosystem, discussing rise of NFTs. What are we really talking about when we talk about NFTs? Use cases, importance, and impact onto the global marketplace, and much, much more. Before we begin, a bit of housekeeping. This webinar is being recorded. All attendees will be in listen-only mode. Attendees are encouraged to submit your questions for each panel using the Zoom chat function. Please, we'll reserve time at the end of each session to discuss those questions and go through them as well. Please keep in mind that this event is offered for general information and educational purposes only. All my lawyer friends have taught me well. And nothing here is intended to constitute investment, legal, tax, or accounting advice. Any views or opinions expressed during this event are those of the participants and do not necessarily reflect the views of the Wall Street Blockchain Alliance or our participant firms. Joseph, thanks for joining us. I'm going to boot you out to attendees until your panel, if that's okay. And why don't we kick off? I'm really pleased to have a great panel here. I do want to kick off with one thing. I know we have Dr. Sean Stein-Smith with us. I want to move him to panel. If you all bear with me a second, we've got an upcoming publication, a primer on NFTs. So I want to give Sean an opportunity to speak to that as soon as he joins, and then we'll kick off with introductions. Sean, are you there?
Afternoon, everybody. Yes, I'm here. Sorry about that. I was just having to reconnect real quick. Yes, and hi. Afternoon. I am very amped for this great afternoon, really, of panels and then a hands-on demo on this hot topic. So just a quick overview of our forthcoming primer around NFTs. It's in the home stretch, and it actually is going to be a joint document, joint publication between us and our friends at the AICPA. And so it's a great overview primer, I think, personally, and did add some background context, and it tries to touch on tax, audit, and valuation issues around NFTs. So I'm really amped for today, and I do think that our forthcoming primer is going to be a great follow-up for this event. So,
Sean, thanks very much. Thanks for joining this. Really appreciate all the work that you do as chair of our accounting working group. Going to move you back to the attendee room, if that's okay.
Sure thing.
Great, thank you all. So why don't we kick off? Welcome everyone. I want to start with panel number one, and the description we had put together and the prep we had all done was NFTs in global markets, and really the impact and the challenges around what's happening in this ecosystem. I think 2020, and Barry or Robert, you could probably correct me if I'm wrong, was $100 million in global NFT value, give or take. I think we ended 2021 at the $44 billion range. So this kind of market has exploded in the public arena. I want to talk about, why it's important, their place in global markets. Barry, you and I and Robert chatted briefly about it. It's far beyond Bored Apes, for example, and some of the other stuff that we're seeing. So we'll have an opportunity to discuss all of those in this panel as well. But I do want to kick off with a little bit of introduction, 30 seconds to each of our panelists, who you are, what you do, who you're with. Robert, do you want to kick us off?
Yeah, absolutely. I'm thrilled to be here, everybody. I'm over in San Francisco this morning, so I'm thrilled to be here. Look, I'm a co-founder and managing partner of a firm called Cosmo Ventures. We're an early stage venture capitalist, primarily in blockchain. Our website is cosmox.com, and we invest in all things blockchain. I'm an early .com guy, entrepreneur. Been building companies for 30 years and all in on the blockchain space. We've made some NFT investments and others. So excited to talk about all things NFT.
Robert, thanks for joining. Sonia, how about we go with you next for an introduction?
Sure. I'm Sonia Goklani. I run a small fintech startup called ClearTrack. I've been working with WSP pretty much, like as Ron said earlier, from the inception. Run the enterprise working group for them. So as part of ClearTrack, we are in the derivative space and the blockchain space, co-authored a book with Ron and other people in blockchain. And now we actually on a board of a company called Points Cash, where we're actually trying to build an NFT marketplace where people can actually buy NFTs using points. And we've also partnered with the Skybox team. So excited to talk about that venture that we're actually getting into. Thanks, John.
Absolutely, Sonia. Thank you. Mr. Finkelstein.
Yeah, hi everybody, and thanks Ron for inviting me to be part of this panel. And I hope everyone who's on will stick around for the third session, where you'll get to meet one of my colleagues from our developer relations team, Ryan Fox, who's actually going to do a real live hands-on presentation of how to create an NFT and its functionality from that perspective. But I'm the 30+ year Wall Street veteran, probably no less than the vast majority of the people on this call around the technology associated with blockchain, but no more than most other people do, which doesn't mean a whole lot, as you guys all know. I am at Algorand for the last 2 years. I've been heading up business development here in North America. We obviously run a pretty sizable NFT issuance platform where we provide the underlying technology that people build upon, different applications. And so this is going to be what I consider to be a pretty fascinating conversation for everybody to listen into, and hopefully to demystify some of the thoughts around NFTs that have existed, that they're, as Ron says, they're not just a Bored Ape postage stamp cartoon functionality.
Thank you, Barry. And you beat me to it. Was definitely going to plug the demonstration at the end of today's event. I think it's going to be a fantastic presentation. Old friends, Jeremy, how are you?
Well, first off, thanks for having me. I appreciate the opportunity. It's great. Thanks for all the panelists joining as well. My name is Jeremy Drain. I'm the Chief Customer Officer for an organization named Monax Labs. Monax Labs is rolling out 2 NFT platforms in April. One is called Aspen, one is called Cedar. Cedar is a minting engine platform, publication platform. That's the supply side of our ecosystem. And then that's Cedar. And then Aspen is a new secondary market. That's the demand and distribution side. So we're going to build both sides of the ecosystem. Prior to that, I co-founded Nfts. Prior to that, I was one of the people that started Luca. Prior to that, I founded PwC's blockchain practice. So, and I've known Ron for a long time. Appreciate all the good work, and I appreciate the opportunity to join this panel.
Great. Thanks, Jeremy. Thank you all for being here. And I know we have other attendees who joined, so please start queuing up your questions in the Q&A. Let's kick off with level setting. And as many of you know, I try to do this for every one of our presentations. We all have conversations in industry. And I remember specifically a conversation I had with a colleague who's kind of at the periphery of understanding all of this. He's in banking. And I tried to describe NFTs. I said, look, this is a big deal. And he said, oh, great, another crypto. I don't care. And my argument was, you're not understanding, and the industry needs to do a better job of explaining. But let's level set. What are we talking about when we talk about an NFT, a non-fungible token? What is that differentiation between other crypto assets and NFT that we heard over the past few years? And how does that tie into this really, what I consider a critical concept around digital scarcity, which is something I think people are still trying to wrap their heads around. Jeremy, you and I've had this conversation several times. Do you want to start with what's your perspective on defining a non-fungible token in this context?
Yeah, I mean, I think NFTs are essentially digital property. They are the mechanism by which fungible tokens, Bitcoin, that moved around fungible value, and non-fungible tokens move around non-fungible value, i.e. digital property or property. And what makes it so interesting is it's a very elegant way to transfer property values between, buyers and sellers, leasers, lessors, those sorts of things. Because, I mean, you essentially have a token, a unique token. You link that token to a file or a file format, and then whatever is associated with that file or file format, you can then essentially use the blockchain rails to enable the transfer and settlement of that transaction. And so, non-fungible value is just a massive part of the global amount of value that there's out there. And so it would make sense that we have this just very significantly increasing I think I read in the thing, it was like 100 million in 2020 and 40 billion or something in 2021, or some kind of crazy sort of exponential curve. Like, we'll see that more because there's so much, property that you can connect into an NFT, as well as a whole set of digital property use cases. And so we think that non-fungible transactions will dwarf fungible transactions probably within 5 or 6 years. So generally speaking, we think this is the natural extension of what fungible tokens showed us was possible.
Jeremy, thanks. I want to open that same question up to the rest of the panel. We've all been kind of deeply immersed in the NFT space. Robert, Sonia, Barry, from your perspectives on adding to that.
Yeah. Look, I think you got to kind of put it in context. So, we've moved from kind of a centralized world to a decentralized world. And what does that really mean, right? So when I grew up, there was ABC, NBC, CBS, PBS, right? Mr. Rogers, 4 stations, couple newspapers. That's how we got our content. And what the internet did was it made everybody a content producer. Today, right, we're all doing Instagram posts, we're on Twitter, we're making movies, but our model for distributing that content is still centralized. Like if I'm a content creator, I got to go put my content on YouTube, or I got to put it on Instagram or Twitter, or OnlyFans in the case of porn, right? So there's always some kind of central institution. What NFTs really represent here, and this is super, super important, is that it's really the decentralization of the digital rights, the rights and royalties around digital property. And when you think about it, our entire world is all about digital property, right? Netflix, movies, videos, photos. And by the way, what's important here to understand is that now what we're doing is we're creating a system. These people are creating systems where content creators, it basically takes that top-down centralized model and turns it upside down. And now all of a sudden, the content creators are the ones that are really driving how they get paid, who gets paid, and what. And the settlement is instant. So when I sell a file or a video to somebody, that secondary market, even in the secondary market, the settlement, the royalties is automatically being distributed on the blockchain. Now, where this gets really exciting for me as a venture capitalist investing in this space is that Jeremy talked about, right? We've got this token, and that token has a linkage to file, but that token can also have linkages to things like membership or a variety of utility. So now all of a sudden I've got this token, and let's say it's a Boston Celtics player token or whatever, but maybe it has special rights. Maybe if I own so many of them, or I own the whole team, I get another right. I get a free membership, and I get discount on hot dogs at the game, or what have you. And so what that does is it now gives brands and content creators a incredible way to activate their audience bases, because they're digital natives. We're all digital natives, right? Walk through the airport, everybody's got their phone like this. We're all digital, right? And so now all of a sudden what this does is it really allows all kinds of new use cases. So this is going to make the crypto market, in my opinion, it's going to dwarf it, because everybody is a content consumer or a producer, whereas not all of us are financial consumers.
Go ahead, Barry.
So Robert, I would just sort of take that and expand upon it a little bit. So first, I love your usage of the term decentralization of digital rights, and I sort of take it one further. That NFT is sort of a misnomer to a large degree. At first, go back 8 months ago, if I had spotted you the N and the F, you wouldn't have been able to come up with NFT. First of all, maybe a year ago, right? No one even knew what they were, but now everybody seems to know what they were. But more, probably 95 to 99% of the world think that they're some type of postage stamp cartoon that looks like some type of simian character or an Algorand Algoana or squiggly lines or something like that, but there's so much more. And it's because at its heart, it's really what an NFT is doing. It's creating a basis of authentication that's immutable because it's using the blockchain to do it. This is the concept that both Robert and Jeremy are speaking to about this idea of linking something to it. What's also neat is that we've been talking about the digital link to it. You can also link non-digital things to it, but use the blockchain rails because you've established this authentication to create a very seamless and efficient world of fractionalization. So in things that most people don't equate with being usages of NFT, like real estate fractionalization, in fact, that is a real world high finance product offering that is happening through the usage of fractionalization of NFTs. So what I'm trying to get across here and building on what both Jeremy and Robert said is that it is so much more than the simple usage of buying and selling of what the common man and woman seems to know right now, which are wonderful looking cartoons. The last thing I wanted to mention, because I think, Robert, you really started to scratch the surface on something that's so important here, which is by and large, NFTs have been looked at from a retail perspective. That is so quickly changing to a institutional approach. And what I mean by that, it's not the let's buy and sell NFTs for money-making purposes. It's using the technology that NFT is presenting to engage with our fan bases or with our clientele or our customers. You use the word, Robert, branding. Well, that you beat me to it. This has become a licensing, branding, marketing tool for massive global enterprises. It's a way of linking up with your fan base. If you're an artist, a musician, a songwriter, a painter, an athlete, or it's a way of linking up to your customer base. If you're Nike or you're Sony or you're Gibson Guitars or you're the Olympics, whatever the case may be, and be able to build into them some form of a interactive experiential result that hasn't really been doable before and can happen instantaneously. And it creates a tackiness to the relationship that makes it incredibly valuable. So I know Sonia's chomping at the bit, so I'll step back so she can have
I
the
do,
floor.
Barry, thanks for that. Sonia, I do want to give you the floor for one moment, but there's one thing I want to talk about there, and it ties Jeremy back to something in the prep session, and then Sonia, the floor is yours, because it ties back to exactly what Barry's talking about. Jeremy, you said something that really stuck out to me when we were prepping. It was NFTs are a format, not a thing. And I would love you to peel that back a little bit if you could. And Sonia, certainly I want you to pile on to that as well. Do you recall that prep session conversation? That really jumped out at me.
Yeah, I think the way to conceptualize it, I mean, within maybe one particular use case around media is we had live sing songs, then you had sheet music, and then you had records, and then you had 8 tracks, and then cassettes, and then you had CDs, and then you had MP3s, and then you had streaming. And now the way that we see for a lot of use cases is NFTs is a new format. And the reason being is because you sort of have the streaming providers as the sort of the rent-seeking central authorities in this model. You have creators on one side and you have consumers on the other. Creators are bought into a model in this world where they get, say, 12 to 15% of the revenue associated with their songs. And consumers on the other side are completely disaggregated from the people they love because they essentially rent the media that they consume. They spend $12 a month on Netflix or Apple or whatever. Their relationship is with the platform. It is not with the creator. And so, what we see, at least in a variety of different places, is that we'll see a format change, and creators will demand the ability to connect directly with the consumers. They want to own the data associated with those consumers. They want to remove the risks of being deplatformed. They want the ability to market directly to their superfans. On the other side, consumers want much more intimate experiences with their creators. They want to be able to do in real life events. They want to do Zoom calls. They want to be able to buy merch. They want to have a more direct relationship with the creators that they love. And as a consequence, the people in the middle are going to get squeezed. And these would be the managers, the distribution platforms, the streaming platforms. these will get squeezed as the creators force a new type of future, and everybody else downstream from them has to adapt. And so I can, when I talk to my friends about, you know, the power of NFTs, and there's a lot of different use cases and ways to articulate that power, you know, as you frame it against music through, you know, a format change, you can conceptualize it in a way that makes people understand why people get so excited about it. And really, a lot of that excitement is actually coming from the creative class. And believe me, we all live in a world that the creators designed for us. And if creators and IP owners desire this type of a framework, then we will have a format change. We'll never go away from streaming, rental. I mean, it's just too easy. But this is going to supplement that. And I think that over time, it is going to be on par with streaming, generally speaking.
Jeremy, thanks. Sonia, I want to give you the floor. I know you've got a lot to say, and you and I have had this conversation many times. So I'd love to have you jump in here.
So I just like to add to what my team members, my co have actually added. So I kind of would add to what Robert said about it replacing the crypto market. I kind of don't see that coming from the traditional finance space. So until an asset class actually gets adopted by the institutional market and this digital finance market adopts it, it really doesn't gain steam. So, I mean, if you look at, you know, it's still this market's in the infancy stage. Yes, the business models of the way we do business going forward would change. Like, I mean, what Jeremy said in terms of the way music information will be shared. Napster had come into place many years ago and, you know, and tried to change the way we do business. And this will also affect the Disneys of the world or the Foxes of the world. But in terms of an asset class actually getting traction, it has to be traded on a hedge fund book. And we all come, I mean, Barry and me both especially come from the banking world. Until it's in their book, it really doesn't gain steam, because we also have a problem. I'm actually, you know, leading this segment to another area, which is the actual valuation side of it. There's no standardized valuation of these JPEGs or the monetization methods that we're coming up with. So until that gets standardized, I mean, this cannot replace crypto, which has gone through a cycle, which has actually got some pricing methodology behind it. There's got a hedging methodology behind it. It's going to take a while to, I mean, for any particular, like, for example, I actually made a lobbyist before I left on vacation a few weeks ago. And he came to me with photographs from Hampton from a party. And he says, can you make this into an NFT? And can you value this? I was like, how the hell am I going to value this? Okay, there are some celebrities out there, but how are we going to actually put a price on this? How am I going to put it on Shopify and say this is, you know, $200,000 or whatever it is? I have no idea how to do that. So, I mean, this is a real life case. I've actually had somebody actually come and give me. And there was another person who came with his paintings. He's a well-known painter I know. And he says, oh, make my painting an NFT. I have no idea what price to put it. He has his own talent, right? So the question is, you know, these are real life examples that have actually happened, you know, in terms of how does this valuation get standardized? I mean, how does it get put on an exchange?
Robert, do you agree with that, or go ahead?
Kind of, sort of, maybe not. So look, I'm an investor, right? And what I'm after, I'm a venture capitalist, right? And many of you are on the call are investors and so forth. And what we're looking for is alpha, right? And so much of investing is about market timing. Where are you at in the product adoption life cycle, right? Because we all know that all this technology grows exponentially. It starts off with visionaries, right? It moves to kind of early adopters, it jumps the chasm and goes to early majority. And generally all the alpha in tech is, and when I say alpha, I mean alpha at scale, like lots of alpha, is kind of when they jump the chasm, go inside the tornado, to use Jeffrey Moore's famous book analogy, into kind of that mainstream majority. There's lots of alpha, but not at scale. There's more alpha, you know, from an absolute kind of number, you know, earlier, but it's not at scale. So when I say that NFTs are going to be bigger than crypto, what I meant is that the plumbing, the systems, the using NFT as an asset class, like we invested in a company called Beezy. Okay, it's a blockchain made easy. and they just launched an end out. They launched a crypto forge. They licensed their forge to people, and anybody can mint an NFT and put it on Shopify. So in fact, there's a currency, another portfolio company of ours called NDAO, NDAU.io. And they have a NFT forge. You can go on there right now, click on it and create an NFT and put it on Shopify. So when as an investor, what we're looking for is, I'm not a board, I'm not going to buy Bored Apes. I don't know if the value of that is going to be up or down, or it's going to go crazy. But what I do know is that the plumbing around this is going to be insanely valuable. There's going to be an incredible amount of alpha. And my personal belief is it's going to grow faster than what we saw in the crypto markets. It's also earlier. So that's what I meant. With respect to valuation, I'm a free market guy. Okay. So if what's the value of a Bored Ape? Whatever somebody pays. And the one thing that's so beautiful about this NFT digital rights management system is that because it's digital, we can put them on exchanges, we can put them on marketplaces, and we can trade them instantaneously and essentially establish a value. I'll tell you a funny story. So I earlier in my career, I did a company that was like Second Life. Many of you may know the virtual world Second Life, and everybody's talking about metaverses today, right? And Web3, which are basically like Second Life, where people can go build their own buy land, and they can build their own kind of presence inside these games. And by the way, they can put NFTs in these worlds. And I had a gentleman that works for one of our portfolio companies, and he called me up and he said, "Hey, I'm buying an apartment in a metaverse, and the land is scarce. So the game is only going to be so big, but I want to buy an apartment in there." And I said, "Well, how much does a large apartment cost in this world?" He says, "Well, the going rate is 7 ETH, 7 Ethereum. What's the price of ETH today? I don't know.
900, give or take, I think.
Yeah. Okay. If you do the math, that's a lot of money to buy an apartment in a virtual world.
Yeah.
So how do you value that? How big will that world get? Can he make money? But there's a market for it. So I just, there you go, $3,000. Thank you from, right?
Thank
so
you, Pierre.
$21,000 for this guy in his 20s who's buying a digital apartment in a world. Again, what we're talking about here, and I'll shut up because I'm ranting, but we're talking about digital property. And if you don't believe in digital property, just look at Fortnite's revenues.
Robert, it's a good point. It's a good point. I just want to clear the floor for some other colleagues here as well, because we skipped ahead a little bit, Sonia. Thanks for that. We're talking about valuation, but Robert, to your point, where when we talk about valuation, and I want to clarify for those who are part of the audience, there's this idea of valuation of a Beeple that sells for $69 million, and what you're talking about, which is digital assets and the tokenization of physical assets and the valuation challenges there as well. Is that friction to allowing NFTs to become more successful? Let's dive into the physical aspects. There are projects right now looking at title, leveraging blockchain and non-fungible token attributes to manage ownership of property. There are security tokens looking at tokenization as receipts essentially for corporate ownership. Is that a broader valuation problem? And I think, Sonia, that maybe that's what you were alluding to. And Jeremy, I want to open that up for you as well.
I actually draw kind of a distinction there, Ron, because the latter point that you brought up speaks to more existing traditional financial assets to which the blockchain doesn't change the valuation metrics that are associated with it. And if there are valuation metrics associated with it, it's very easy to then, through Oracle, bring them on chain. I thought what Sonia was speaking more to are some of the new age products, like to keep coming back, I feel bad for the people who created Bored Apes. Well, actually, I don't feel too bad for them, honestly, because they're doing great. But things like Bored Apes, where it's very hard to put a value on certain things. Certainly, to Sonia's point, every Tom, Dick, and Harry who takes pictures comes to me and says, hey, how do I make an NFT out of this and how do I sell it? And there is a big difference there, because ultimately for NFTs, when we're talking about collectibles, and please let's draw a distinction between collectibles as part of an NFT asset class and NFTs as itself an asset class, because please, if people don't think I'm right on this, I'm willing to take anyone to dinner who can prove me wrong. NFTs is this big an asset class. Collectibles is this portion of that. The part that is going to dominate the world is not going to be this part. It's going to be all this other stuff. This part, which is the collectibles, Sonia is very much right. There is a world within that where there is valuation capabilities because of everything that Robert said, Jeremy's alluded to before. I don't see the value in certain things, but it doesn't matter. I don't see the value in most art that's hanging on people's walls, but somebody was willing to spend $20 million for that piece of art that's hanging there. And some bank in New York is willing to lend against that piece of art. By the way, that for 80 years, no one would lend against that piece of art, but now they are. Well, when the world starts to lend against that type of collectible NFT, which is very, very slowly starting to happen now because of the valuation, then that will become a real valuable investment thesis. But the other part of the NFT marketplace, what we were talking about, which ties into this idea of real world assets that can be NFTIs, if you will, that have valuation metrics associated with it, can then move themselves into other DeFi applications where lending and borrowing and staking are capable, and it really starts to expand dramatically the capabilities of this technology. So you have to be very careful when you start to use the word NFT, because it's just thrown out there as if it's the catch-all, and it really isn't. It's catch-all up here, but not when you dig down a little bit.
And I think we're scratching the surface on what's capable, what's possible here. I think a lot, it's just like DeFi in the same sense. Right, DeFi is still in its infancy. We're just scratching the surface on what's capable there. So I think the exciting thing about it as an investor is that everybody is just experimenting, and it's really great to see all the really great use cases using this.
Actually, you brought up an example before, Robert, a story. So I'll give you a very quick one. I was through a previous relationship, someone called me 2 days ago and said, hey, we have a company that has a particular type of collectible that we all had as children. We wish if we went downstairs and could find our shoebox full of them, we'd probably be very happy if we could find them. And they said, this company is willing to lend against that asset on a 30% LTV. Okay, makes perfect sense. As long as there's people out there who are willing to accept that money with all the different restrictions that are associated with it. But that's it. That is a type of collectible, baseball cards, that has existed for 100 years, but nobody has ever lent against it by and large, for all the same reasons that Sonia was bringing up. But magically, now people are getting comfortable with that because they're seeing other things that are viable and doable. Well, that will happen in the NFT space. I don't know to what degree, I don't know to which assets and all, but to get maniacally focused on that would be to miss the forest for the trees.
Right.
Because
Sonia or Jeremy, anything you want to answer that? I just want to give them a little airtime as well, folks.
Jeremy, go ahead.
We're not passionate about this.
Yes.
I think on this topic, I agree 100%. People are defining NFTs either too broadly or too specifically. And just depending on like what you feel comfortable, how you think about the world, you sort of build up a viewpoint and a perspective, and you just can't get, you have to expand your mind here. The technology is incredibly broad and incredibly deep, and there's going to be a lot of different use cases. I did happen to be reading David's comment in the chat about thefts and hacking and losses, and that obviously doesn't sound like an asset class, and that's a particular point of view. I would argue that you weren't in Bitcoin from 11 to 16 because that was Bitcoin from 11 to 16. So I think the reality is this is just the state of play for the non-fungible side that we already saw on the fungible side. The second part of your question is what do we need to do to grow it up? Well, I mean, I think we've touched on it a little bit here, is we need better information reporting. We need better legal clarity, and then we need regulatory construction that'll allow us to scale. When you have those three things, then you're going to see mass market players like Nike and those guys come in size, and then this becomes a globally accepted thing where you have NFTs on your iPhone wallet, and then you'll look back in 3 years and be like, what the hell? I don't even remember a past where I didn't have NFTs in my life. And that's going to be a natural play over the next 3 to 5 years. We already saw it happen with fungibles, and we'll see it happen with non-fungibles. You either get on that train or you pick apart all the problems along the way, and you can look at the market cap at 40 billion today, or in 5 years you could look at 400 billion, and
Yeah.
I think that's the natural path here.
Jeremy,
Yeah,
let me go ahead, Robert.
I was going to say, if I could just pile on with Jeremy here. So look, what does an investor do? I love problems. I absolutely love when I see, well, what about the hacks, threats, losses, everyday problems? Or I love it when somebody says, man, that's too complicated. Because as an investor, I want to invest in companies that solve that problem, right? And when they solve that problem, it's alpha. Okay, that's investment return. And I saw, I'm a .com guy. I saw the same exact thing in .com, right? And we saw the same thing, as you said, in Bitcoin. So, all that says is that it's early, but the overall trajectory on this is undeniable. So, for us as investors looking for alpha, we're looking for companies like Beezy, okay, like Algorand. I mean, at layer one, solid in the NFT space.
Robert, and your example is the internet, and then the solutions around worldwide web access is your parallel there.
Yeah, when I actually started the very first financial service on the internet back in 1993, first stock quote server. Most people don't know that. Like I put Charles Schwab on the net. I mean, it's crazy, And by the way, in 1993, there was no way to connect Windows to the internet. Right. And so I'd go around the country saying, hey, you, Mr. Financial Institution, I'm going to put you on the internet. And they go, what's the internet? What does WW mean? And how do I connect? And nobody's ever going to trade stocks on the internet. And somebody like David Poole over in at Spry, what did he do? He created a dial-up DLL WinSock so that you could connect Windows to a modem so that you could actually dial into the internet. So, and what did AOL do? It put millions of people on the internet. So it's the same kind of thing. It's the same movie.
Thank you all. Let's move forward. Lots to cover, and we did mention regulatory stuff, and I encourage all of our attendees. Panel 2 will deep dive on some of the regulatory and tax and legislative issues as well. But Robert, I'm going to piggyback off of something you said, which is kind of this moving from centralization to decentralization. I guess this is more of a philosophic question for the panel, but are we really looking at the beginning of kind of the democratization of access to assets and capabilities that people didn't have before? We've talked about NFTs, and we've talked about the ability to tokenize these different things. What does that picture look like, and how does that disintermediate the world that we live in? And I'll share, by way of example, growing up, I think all of us, I remember waiting in line at the bank with my parents as a kid with their little safe, savings passbook, for example. I cannot literally remember the last time I walked into a bank. And that leads me into these conversations with colleagues that there are tens of millions of people who are unbanked, underbanked, don't have access to the financial services every one of the five of us expect. Are NFTs part of that evolution?
Yes. Yes.
That's not an NFT question. That's a blockchain question.
That's a blockchain, this is a personal property revolution. This is a personal digital property revolution. That's what's going on right here. Right. If you're in Ukraine and you got to wake up in the middle of the night, you got to grab all your property, and you got to talk to your kids and your family, say, look, we're going for the border, grab the gold, grab the icon that grandma gave us, and you head for the border, and somebody's going to stick you up and take your money. Okay. That's a tragedy. And I think what something like that is showing us is that if I own Bitcoin or I own my digital property, my key is my property. Okay, as long as I got those 12 words in my head, nobody's going to take that property from me, and I'm walking across the border and I have all my value. And that's what decentralized, that's what this is all about. This is about, it's a personal property, digital property revolution that's going on here. I'm sorry to be real high level here, but it's definitely, and NFTs have a part to that.
Yeah. And I think that, and Barry, you said it, that's not an NFT comment, that's a blockchain comment. And I fully agree with you, but NFTs to me are that kind of next level of blockchain capability and allowing for what I'll call true digital scarcity.
Well, I'll break it down maybe even more simply. So
I need that.
native crypto, be it Bitcoin or ETH or Algo or Sol, or pick your favorite coinage, if you will, is the easiest way, to Robert's point, to move straight cash equivalent value across the blockchain, from a decentralized perspective. Just NFTs now allow you to go the next level to move property, whether it's digital property or physical property or ownership thereof, across these same type of rails. Think of the internet as the way that we moved information across. Think of blockchain as the way we move economic value across to people. And NFTs are the way we're moving economic, physical or digital value across. And so I'll give you a very real world example, Lofty AI, which is become an incredibly successful single family fractionalized home purchasing site and use case. Lofty.ai, you can look it up tomorrow, and you can buy fractional shares in homes for $50 a share. It has exactly done the word that you used before, Ron, democratize. There's no way somebody in pick your favorite country around the world, let alone the US, could have gotten their hands on a piece of property in an up and coming area of Detroit, Michigan. No possible way they could have done that. But through the internet, which has led to the blockchain, which has led to NFTs, you now have the ability to have your investment share in that type of a property. That's powerful stuff.
Yep.
Very powerful stuff.
Yeah, Jeremy, Sonia, you were both nodding in agreement. Anything you want to add to Barry's comment?
Actually, I got a finger out of Jeremy.
I just add
Sonia,
one.
please.
I just add one thing which I'm very excited about the NFT word, not from the value transfer perspective, but I see a lot of change from a business model perspective, where in terms of how we're going to do business going forward, I think is to Robert's point, internet changed, e-commerce changed the way we do business. And I think NFT is going to change how we think in terms of, what's going to be an asset mix down the line, whether we retire or in terms of what is our real value of, an organization or of a person or a family. It's going to change at the personal level. It's going to change like that, and the institutional level also. Earlier it was only amount of money you had in the bank or the property you had somewhere, or in terms of the gold you had or whatever the other assets, silver or whatever it was. But here with digital assets, in terms of the overall valuation of a country or of a organization, is going to change because of the different business models. Disney, for example, will have to rethink in terms of how they're going to have their rights. Today they have so many movies under their belt, and they showcase it at any theater. They charge X amount of dollars for it. So how will that be monetized, and how will that be translated into an NFT, and how will the valuation of an organization change, is what I'm excited about. And I'm not sure every organization is going to go through a transformation in some form or the other, because of what is their digital property that they have, whether it's for a bank, for example, is the agreements between different banks, or is it the, in terms of the book value that they have with the institutions, which is an asset. What everybody will have to rethink in terms of what is their assets and how that can be digitized. So that is what I find very interesting from an into NFT perspective. How in terms of the whole digital asset value is what makes very exciting this space.
So let's pull that. Let's abstract this a little bit, right? We've said a lot, right? There's this ongoing. We're in the prehistory of the democratization of things like financial services and economic value ownership. We're looking at evolutions across multiple industry segments. So let's ask the obvious question: is what's the UX for that, right? What makes, and I this wasn't directly part of our prep, so I'm sure you'll all yell at me afterwards, but what gets everyday people involved in a world where economic value is transferred directly and transferred between parties leveraging non-fungible tokens? Thoughts? And that's a big question, I think, right? Because it's one thing to say, I went to OpenSea, Ron took his really horrible digital art, sold it for like $5 or whatever someone would be willing to pay for it, and calling that a good use of NFT capabilities on the blockchain. It's probably not. But what's the longer range vision? What's going to get
added value?
World? What's that?
The word is added value. Sometimes sometimes that's represented in $5 NFT now being worth $7, and sometimes that's represented in the fact, to the point that I believe Rob made before, which is the fact that I now have a way of, I've purchased a ticket to the Boston Celtics, or a portion of the Boston Celtics, because they're selling shares to their fans through NFTs. And because of that, it inures to me other value. Value isn't always measured in dollars and cents.
Fair.
Value can be measured in other ways, other rights, other gamification factors, other things. That's taking on bigger and bigger value to the world at large. And that's where NFTs are so incredibly powerful to the enterprise side of the world that I mentioned earlier in my soliloquy.
Yeah.
Yeah, I
fair
mean,
point.
I would agree
to
with
add to that, the points cash use case has been, and the board that, I represent, Barry, also actually works with us. We use the Algorand blockchain out there. So we're kind of looking at giving the users to convert their points so they can actually buy, NFL memorabilia or any other gaming, artifacts that they want to buy. So I think so points is one asset again. It's kind of, think of it as, again, a value, like Barry said, right? It's also an asset that a person has, whether points is with American Express or whether it's with Continental. Now you can do more with it. It's just not that you get only newspapers, or you can only fly, or you can braid your economy ticket to a business class. You can do much more with it, because most of the people didn't fly the last couple of years. They're sitting there, they're expiring. So
Yeah.
Go ahead,
one of the things that's interesting, this is an interesting kind of dynamic, and Barry talks about utility, right? I talked about utility and what and activating and engagement, and I think that's what's really going to drive this, and what will. So my son's in his 20s, and he says to me, he's looking at his phone, and he says, "Man, I just got a drop on Adidas, Yeezy shoes." So they, I don't know if you guys follow this, but these.
I don't know the word you just said, Robert.
Okay,
Maybe
so
that's because I don't have a
Adidas,
kid.
Kanye West designed a bunch of shoes. They're very popular, and Adidas produces these things, and you have to join their app, and you earn points, and you do stuff. And then you get in line to buy this shoe. And generally they have like 20,000 people wanting to buy the shoe. And I don't know, only 1,000, I don't know how many people get it, but my son's never gotten it. But then there's a huge set, and the shoe is $230. And then there's a huge secondary market where these shoes basically go for sale for 1,000 plus. Okay. And by the way, if you're in your 20s and you're walking around in a pair of Yeezys, people know, man, like there's cachet in that, because they know it costs $1,000, right? So what did Adidas do in that whole process? I mean, the old model is just produce shoes, put them in the store, and everybody wants them. But what they've done is they've activated their fan base to a point where they are checking in on it all the time. And the pricing is there. Now, you could argue that Adidas, they're not getting a cut of that $1,000. They're just selling the shoe primary issuance. Think of it as a primary issuance in a secondary market. Okay. So primary issuance, Adidas is making all the money, and they're thrilled because they're getting the activation. They've got loyalty, but there's also a secondary market because of this. So the reason why I brought this story up is that all of that behavior, and by the way, this is happening everywhere. It happened with the Sony PlayStation. It happened with the Xbox. It happens with video game, everywhere. And all of that kind of business model and activation could be affected using essentially the NFT rails. And what's exciting about that is that now the secondary market, the economics of the secondary market, all the royalties that apply to the issuance also apply to the secondary market. And so, and it's all digital and it's all automatic. And so it can't be, leveraged. So, it's just a long kind of, but I think that's how this world, that's how these, I call them digital natives, right? These are kids that grew up with the cell phone in their hand, with the computer, doing this stuff. That's what they're looking for. And so NFTs really bring the business model seamlessly into that.
Robert, thanks for that.
Ron, let me just build off that, because it's going to freak everybody out here for a moment.
Yeah.
So I'm so glad you brought up the easy example, Rob, because I'm not sure if anyone knows, but the Yeezy became what it became because of DMC. DMC created a song, and that's what gave rise to the Yeezy Adidas shoes that ultimately became the phenomenon that they were. Why am I bringing that up? Because DMC has just launched his own token on a STOI token, STOI, on songs that own itself. So his latest song drop, he is NFTized, and he now owns, and the those who own the token of that own all the royalty rights associated with it. It goes to show how circular the whole world is when it comes to movements of commerce in general, and NFTs are right there at the forefront of it now.
Yeah, Barry, that's a great example. We've only got about 10 minutes, maybe a little more. We do have questions coming in on Q&A. For our attendees, please continue to submit those questions. I want to throw one last, what I consider to be an enterprise hurdle out there, and I'm just going to throw out the word. Sonia's heard me use this word 100,000 times. Interoperability, right? Because it's one thing to have these kind of conversations around walled gardens within the world of OpenSea and colleagues not understanding. Is greater interoperability the key to enterprise adoption and leveraging the economic benefits of NFTs? What are our thoughts there? Sonia, I'm bringing that back to you because you chair our enterprise and technology working group first.
Joe, I kind of look at interoperability in the same way as I looked at it from, a technology perspective in the banks. So, there would be middleware companies that will come in. Like, for example, there was this company called Upshot that just recently announced that they have, an appraisal-based, API, which links to all the other platforms. They actually got a $22 million raise, so there will be the middleware companies that will come in, just like the vignettes of the world came in the technology world, who will actually try to connect these spaces, build APIs and connect them. And I think what in this situation is going to be a little more complicated, because it would have to be by industry, it would have to be by the different business cases, because the business, in terms of the way we do business going forward is going to change. And to Robert and Barry's example, I mean, I actually read about the Stoy coin, and I was like thinking, now what is the, the flow behind it in terms of how you're going to monetize, the coin investment in others. So the tracking, the analytics, and then the whole metaverse angle to it will have to kind of, integrate with it. So it's a challenge, but there'll be a lot of middleware companies that will come and make money out of it. So I see the same thing happening.
Absolutely, Sonia. Thanks. Any last comments on interoperability? I do want to hit up our questions in Q&A. Please keep them coming. Anything anyone wants to add to interoperability?
I'll make one point.
Go for it.
Generally speaking, I think there's a whole set of higher level commercial transactions that people want to do with NFTs that are not really possible to do at scale today. So right now, people can do buy, sell, swap. Okay, that's great. And that is facilitated because the NFT standards of 721 and 1155 are built off of ERC20, which is fungible tokens. And so the ability to easily transfer value using those standards makes buy, sell, swap very easily executed. However, if this is digital property, then what you want to do with that digital property has like more complexity, right? You want to do lend, lease, license, subscribe, mortgage. Those types of transactions introduce an additional degree of thinking, which is that there's actually two people that can hold a token at any unit in time, a legal owner and a beneficial owner. This is problematic because if you use an ERC20 standard, you only have one owner to a token at any one point in time. And so what we're going to see probably in the second half of this year are new NFT standards where you end up having the ability to have multiple owners of a token at a unit in time. This will allow me as the owner of an NFT to lend it or lease it or license it to any of my colleagues here, even though they have the NFT in their wallet. They don't, just because you have the private key doesn't mean you can sell it, doesn't mean that it's lost. It will be returned to me programmatically because I am the legal owner. The other benefit of that is that you now get the full weight of the legal system, which now has the ability to look at NFT transactions in a way that makes sense. And so then you're starting to address many of the IP, copyright, derivative works, all of these issues associated with NFTs, which heretofore they couldn't really work out. So the reason that I bring this up is because what you'll most likely see, in my humble opinion, is you're going to see changes in the standards at the DNA level. And then what that will allow is it will allow marketplaces across chains, as well as L2s within specific chains, to offer commercial transactions that are interoperable across other marketplaces. This is what drives liquidity, this is what drives gamification, and this is what will drive scale. And so ultimately, I think interoperability is more a function of fixing issues at the NFT level, not about driving unique capabilities at the marketplace level. And this is, I think, where we'll probably be driving that conversation over the next 6 months. I know that was kind of like a lot of shit there,
That's
but
very, that's very well said. And by the way, that's happening in DeFi as well.
Yep, it is. We're running on the clock, and I just want to make sure we hit some of the questions in Q&A. I'll read them out for the panel. Anyone who wants to grab them. Amanda, thanks for the questions. Quote: I have many artist friends who have asked for guidance on minting NFTs. Are there any trappings or considerations for creators? Platforms, fees, how much control does a creator have over the future royalty stream? Who wants to grab that? Go, Jeremy.
All right. So first of all, people have to recognize that royalty payments are voluntary. So even though they can be executed programmatically, they are completely voluntary. And so, and the reason being is because there's a transfer function in an NFT standard, there's not a buy function. And so what that means is that when you as a creator are looking at the different chains and marketplaces that you want to do your NFTs, understand like the amount of money that you collect in your primary issuance is key. And then the amount of money that you collect on your royalties in the secondary market is key. And make sure that you are pointing yourself into a position where your transactions for your secondary market are as automated as possible. And this will get fixed over the next 6 to 12 months. But this idea that all of this stuff happens automatically and programmatically is not quite there. And so be very, very conscious on where you're going to do your primary issuance and where you expect your secondary market transactions to occur, and make sure that you pick those in a way that you increase the probability that you will actually get paid your royalties on secondary market transactions.
So I would ask Amanda to bring that same question up in panel number 3 to Ryan, and he will show you exactly how you can do that on a chain, on an L1 chain that has all its risk-based controls right there at layer 1, like Algorand. It's a very good point that Jeremy points out. I would tell you that that is of secondary importance to make sure and be mindful when you're thinking about where you're going to mint your NFTs on what your transaction costs are going to be, because it's all well and good to have a very lovely NFT, but if it's not people's $69 million thing and it's only a $10 NFT that costs you $200 to have as a transaction, doesn't seem very viable. So you might want to be wary of that.
Let's
take another good call.
Let's take another question, everyone. For those questions we don't get to, email us info@wsba.co. We'll reach out to the panelists. The next question was, in your examples, there isn't a quote issuer or sponsor on which initial purchasers rely, and therefore arguably the creation of security is in the hands of the initial purchaser. This is almost a panel 2 question, but it really is a relevant thing because there's this argument around, are we creating securities? Does anyone want to weigh in on this?
Dude, that's a whole different panel.
Yeah, I'm seeing both sides of that fence coming out.
Oh yeah.
And in fact, I'm here in San Francisco at a conference, and I just talked and that's the genie's out of the bottle on one side, that's.
Yeah, I mean, Ron, as long as we're answering that question, let's just ask, are loans securities also? We might as well go right down the biggest rabbit hole we can.
Let's not go down that rabbit hole, please.
Royalty, media with royalty payments is a security.
That's a legal question more than
Yeah.
Panel number 2, we can
Next.
legal question.
my disclaimer stands. None of this is legal advice. I'm going to skip
Yeah.
around a little bit. Stacy actually really made a good point. We were talking about this. Folks were using and swapping NFTs a few weeks ago at ETH Denver to pay for their trip to the ski slopes. I was not aware of that. And now I have to go out to the next ETH Denver conference.
I mean, there's a lot of really cool stuff going on with NFTs. I mean, you know, we have a Discord channel, and the only way you get into the Discord channel is if you own an NFT. We have another company out in Europe, and they're an IDO platform where you go to collect your, you know, to participate in up and coming digital offerings, and their entire whitelist system is now moving towards NFTs. So, you know, a lot of times people want in on certain things like Yeezy shoes or a new IDO or whatever. And people are now using NFTs as basically you got to own that NFT and do that. Look, you know, one thing I want to make clear is that when you think about Web 1.0, right? What was Web 1? Web 1 was login, username, password. That was Web 1. Internet 2, Web 2.0 is what? Log in with Facebook, Google, or Twitter, right? What is Web 3? Web 3 is connect your wallet. Okay, so what we're doing is we're using this whole concept of having a key, my own private keys, and using that to sign transactions. And what's really cool about NFTs is now I can use, I sign in. So here's the transaction. I want to be whitelisted for an IPO. I go to a site, I connect my wallet. What I'm doing when I'm connecting my wallet, quite frankly, is I'm taking my key privately in my wallet, and I'm connecting it to that site in a way that's secure, that says, yep, that's Rob Frasca, and yep, he owns that NFT, so I'm going to give him the rights. And that's
I love that story. I'm going to count that as your closing comments, and we can do an entire session on that. Web 1 to 2 to 3. I want to spend a couple of seconds on closing comments, and then we'll take a quick break. For those questions we couldn't answer, please email us, but then we'll take a quick break and introduce panel 2. Closing comments, Sonia, and then we'll go around the horn.
So as I said earlier, NFT is probably going to change the way we do business going forward. And I just like to add one more example of where ETH is being used. The Formula One racing, a friend of mine actually just posted that you use ETH to buy the tickets at Formula One. So you can't go to Formula One racing unless you have an ETH token. So, and the Dubai, I think we should watch Dubai very seriously, because it's actually the upcoming NFT marketplace. It's actually becoming a really big hub compared to any other place that I've seen so far from what I'm reading. And we should certainly watch the NFT innovation in that space at that location. So just my 2 cents in it.
Sonia, thank you so much. Barry, closing comments, my friend.
Yeah, again, I'm going to go back to what I said before. NFTs is not all about just collectibles, and it's not all about wonderful postage stamp cartoons. That is a part of a much bigger, more important ecosystem that is NFTs in of itself. And if you're missing the forest for the trees because of that, you're really limiting yourself to the real value of what NFTs are and what their capabilities are. And you're going to be hearing more and more about NFTs in that space, and less. Not that the collectible side will be going away anytime, but that will be less of the focal point compared to what is capable with this technology going forward.
Well said, my friend. Jeremy, old friend, closing comments are yours.
I think I just go back to what we said when we were talking with David, which is, we're just where Bitcoin was like in 13. And if you could deal with the volatility and the lack of complete structured, unstructured data, then you bought Bitcoin at 100. This is the same thing on the non-fungible side. And you either can get behind a world where not everything has an answer. It hasn't been completely thought through. People need to build, but you can buy at 100. I think in 5, 6, 7 years, you'll look back and, You'll have NFTs on your iPhone and you're going to be like, shit, I was in a world where there wasn't any NFTs and I got rich because I was able to like put a little risk on and be smart about it. And I think that that's really where we are in the cycle. We're probably like 3, 4, 5 years into where Bitcoin was, and there's a lot of opportunities to get educated and take a position. And I think that people like saying, oh, it's a Bored Ape or whatever, it's such a short-sighted perspective. I'd hope that the people that were on this, that participated in this webinar, are smarter than that, and they can see through that, and they can take a position that I think would be life-changing, 3, 4, 5 years down the road.
Jeremy, thanks so much. Robert, Sonia, Barry, Jeremy, we're so grateful on behalf of the Wall Street Blockchain Alliance, on behalf of everyone who attended. Really grateful for your expertise. We're going to take a brief break. We'll bring on the next series of panelists. Stick around as attendees if you like. There's a great algo demonstration at the end. But again, thank you all. We'll take a quick break and go right back to our next panel. Take care.
Thanks, everyone.
Cheers.
Thank you.
All right, welcome back. I think we have the entirety of panel number 2. Just wanted to say a quick hello. Our moderator for today, old friend Joey Ryan. Joey, I'm going to turn it over to you for introductions. I'm going to do the quick disclaimer again for everyone on the call and for all of our attendees. Nothing suggested here is tax, legal, investment, or accounting advice. If you have any questions, we'll be moderating throughout. Please submit them through the Q&A. Joey, I'll take my big head off of the screen and turn the entirety of the call over to you. Welcome to panel number 2, which is NFT, law, taxes, and more. Joey, over to you, my friend.
Cool. Yeah. Happy to be here. Hope everybody is doing well and learning about NFTs today. Hope everybody saw the news too. If there's one thing to take away, if you think NFTs are a fad or not, yesterday it was announced that Yuga Labs, which is the owner of Bored Ape Yacht Club NFT collection, they just raised a $450 million funding round at a $4 billion valuation. So whether that's frothy or speculative or whatever, take it for as is, but let's just say there's definitely money being poured into the space. So side note, before we kind of go down the rabbit hole of law, taxes, etc., I will allow everybody to introduce themselves. I will introduce myself first. I'm Joey Ryan. I am the CFO at TrustSwap. TrustSwap, we actually have our own NFT platform called Swappable. We do high-end NFT drops through our platform, doing what we're calling INOs, initial NFT offerings, NFT drops, and working with various artists, celebrities, and sports teams, et cetera, in their NFT and marketing strategy going forward. Hannah, do you want to go ahead and provide your intro?
Sure, thanks so much. Hi, everybody. I'm Hannah Taylor. I'm a partner at the law firm Frankfurt, Kern & Klein & Sells. Interestingly, and probably very different from the rest of you, I am not a securities lawyer. I'm not a finance lawyer. My background is actually in consumer protection and intellectual property. And so that has been, a big topic in the NFT market. So I'm really happy to be here and look forward to chatting about the law.
Cool. Olia?
Sure. Hi, everyone. Thanks for having me. Oliver Ramchuck, Director of Tax Solutions at Luca, which is one of the market leaders in the digital asset industry in data and software solutions. In my previous life, I used to give tax advice to and develop tax strategy for large multinational traditional financial institutions. But now I'm bringing all of that conventional knowledge into the crypto tax space.
Great. And last but not least, Joe.
Hey, everybody. I'm Joe Dillon. I work in product solutions at Bitwave. We are a tax and accounting platform focused on businesses that are in the digital asset space or that just hold digital assets. I'm a CPA, came over to Bitwave after about a decade in public accounting. So that's the lens I come from.
Awesome. I'm a CPA as well, Joe. I have to say I'm a recovering public accountant.
Yeah.
Count me in
yeah.
too.
Yeah,
Listen,
5 years, going 5 years strong now. So I'm excited about it. I got my 5-year token just last month. No, I'm
Good
just
for you.
kidding.
My wife is a CPA. She still has to account for all of her time by the minute. And
Yeah, all that
I don't miss
nonsense.
it. I don't miss it.
I don't miss it at all either. Okay, for those of you who have been with us for the last hour, I'm sure you've heard all the NFT talk, but let's at least kind of do a quick recap or regroup. Hannah, do you want to kind of just from a legal perspective, just describe kind of what NFTs are in general, and then maybe just give some high level, if you want to say like legal traps or regulatory traps that could be issues for, if you want to say individuals and potentially businesses as well that are starting to kind of dip their toes into the NFT space. If you want to give a quick kind of high level perspective or overview of that from your perspective, that would be great to kind of kickstart us going forward.
Great, happy to, thanks. So I think one of the challenging things about having sort of only a few minutes to talk about a topic that is so complicated and exciting from a legal perspective is that each of these sort of buckets of legal risk could be their own 2-hour presentation. So the most common issue that we hear as lawyers, again, not in my practice, but sort of generally with non-fungible tokens and was mentioned in the last presentation, has to do with securities law. And one of the things that I think is most sort of frustrating for all of us, and particularly businesses that are trying to, abide by the law, is that we have very little information from the SEC or other regulators about how the current securities laws apply in the non-fungible token space. There was an article in Bloomberg a few weeks ago saying that the SEC was actually starting to send out feelers to various NFT companies, sort of trying to, learn a little bit more information about whether or not their drop could be considered as something that implicated the securities laws. And one of the main things that Bloomberg reported was that they were really focused on NFT drops that have a fractionalization component to them. And so, if you take away one thing from this on the security side, given how briefly we have to speak about this, I think really paying attention to whether or not there's a fractionalization component of your drop is an important sort of red flag in terms of talking to a lawyer on the security side. The other piece, and many people are probably aware of this, is the case against Dapper Labs, which actually did not come from the SEC, but was a private litigant. Dapper Labs, the company that worked with NBA Top Shot to create the Top Shot marketplace, was sued actually by a private litigant for violations of securities laws. And the theory there was that each of those moments was not necessarily functioning, as we talked about in the last panel, like as a fun piece of art or a collectible, but actually as an individual investment vehicle that basically like rose and fell in value and thus was acting as an unregistered security. So we in the legal community are paying really close attention to the outcome of that case, which is still pending. So from a securities perspective, I think, wish I had more definitive guidance, but I think, if you're working on developing a closed NFT marketplace, or you have a fractionalized project, I think those are the two sort of big places to watch from a security standpoint. Did you want to go ahead?
No, keep going if you have more to add on.
I mean,
absolutely.
I have so much more, but no, go ahead.
Well, okay, great. No, appreciate your thoughts there, your initial thoughts. Oya and Joe, do you guys want to, and I guess we're kind of all the CPA tax heads here, or tax perspective heads here. Do you guys want to add your thoughts, kind of how Hannah briefly described, and again, obviously NFTs is a rabbit hole of many different directions, but just overall, some very high level initial thoughts on, if you want to say tax or accounting implications for NFTs. We can dive deeper into specific tax guidance as well as if you want, or just, initial considerations, and then maybe diving into specific guidance or potential releases coming up. But just maybe let's give your high level thoughts before we pivot to talking about like royalties or collectibles and the tax considerations around those.
Yeah, sure. Thanks, Joe. Happy to start. I think the biggest consideration about tax guidance is that there is no guidance really. Shockingly, even the FAQs that the IRS quietly updates behind the scenes here and there, I'm sure people sometimes go look at them and all of a sudden there are some more questions added. Non-fungible tokens are still not on the list anywhere at all. So where we find ourselves is, again, saying that it's a digital asset, so it's going to be property just the same way as any cryptocurrency token is. And we're going to wedge anything that's related to NFTs into this conventional existing tax framework until the service issues more guidance to us. That's as high level as I can get on this.
Yeah,
Joe,
Joe,
I don't know if you want
give
to
your thoughts?
Yeah, I mean, that's exactly right. I mean, I think that maybe one of the biggest misconceptions I hear from people that are sort of not down this rabbit hole is that folks in NFTs and crypto like the fact that there's not regulation. And I'll tell you from my seat and so many people I talk to, we're dying for regulation. We're trying to fit this thing, like you said, in a box that it really doesn't fit in. And, and I think the one thing I talk about a lot with my clients is that every NFT is different. Hannah brought up a point about like, hey, are you fractionalizing yours? Like is there any way this could be considered a security? I think, that first, how we classify it is really that first decision point. And every NFT needs to be sort of considered on its own merits, its own features. All of them are different. Some NFTs, do provide you rights to physical property or access to physical spaces. Some of them, allow you to earn other tokens, which some have a market value, some don't. Others might give you, there's music NFTs that are out now that give you a share of royalty revenue. And so, ultimately, like from an accounting perspective, we're treating these as indefinite life and tangible assets. Well, but okay, what does that mean, practically? Well, what it means practically is we record them essentially at their cost basis, and we have to test them for impairment. But to test them for impairment, you got to figure out a fair value of them. And how the heck do you figure out a fair value? There's a lot of moving parts here. And I mean, I could go for an hour on all of those variables, but I think that the main point I want to really reiterate is that everyone is different, and there may not be, there is some nuance here. There might be some rules that people are going to come to different conclusions on from a tax and accounting treatment. And really that's a function of lack of clear rules.
Sorry, I couldn't find the mute button. Awesome. Yeah, no, that makes sense. From my perspective, very, very similar. I share the very similar opinions as all three of you. From my perspective, and being on the industry side, right? So you all are on the kind of service provider side. So being on the industry side of things, yeah, regulation, we're all dying for, right? Like, what can we do? What can we do? Or what can we do? What can we not do? For us as a company, any company that's operating in the crypto space now, no matter what jurisdiction you're operating in, whether it's in the US, Europe, South America, anywhere, basically globally. Obviously, the laws are very different in terms of how crypto, how crypto friendly certain jurisdictions are in terms of allowing crypto companies. When I say the word crypto company, I'm talking about companies that are either providing services in the crypto space or utilizing crypto on the back end for transactional purposes. Or creating, a totally new environment and community around a token or something like that. I mean, there's I guess multiple different layers there, but any kind of crypto company, how friendly of a jurisdiction where they can operate and play in like a certain sandbox where they can say, okay, we're building this, we're going to involve this community, it's going to involve this token, here's what the token does, or here's what the NFT does, provides access, blah, blah, blah. How open are those jurisdictions to allowing you, quote unquote, to kind of evolve your project or evolve your NFT going forward. So yeah, you know, it's very much still, I've said this many times before on many different calls, it's still wild west in terms of it's still very early, right? We're in the maybe bottom of the first or top of the second inning in a 9-inning baseball game, especially in the NFTs. I think Jeremy brought up on the last call, Jeremy Drain, that, you know, we're in Bitcoin of 2013 in the NFT space right now. So yes, the first iteration was, you know, illiquid JPEGs that everybody gets excited about. But, you know, I think we're evolving that to what you're going to see going forward, where everything that you touch daily is going to have some sort of digital NFT aspect to it. And I think it was Jeremy or someone else on the prior panel that said, if you're only seeing the illiquid JPEGs part of it, you're very short-sighted on kind of the future of where this is going to be 2, 3, 5 years down the line. But on the industry side of things, yeah, for the kind of accounting and legal perspective, you know, we as a company internally, we're actually in the middle of relocating our jurisdiction to a more friendly jurisdiction where we can provide these kind of launches for, you know, through or provide these NFT drops and launches on our platform and operate within the right regulatory sandbox and framework to where we know that the government is actually working with us and not necessarily what feels like in the US almost against us most of the time, where you know, they're kind of semi-policing as to what's going on. So we're seeing more and more really friendly jurisdictions where the governments are actually very open-armed to having you work with them. Specifically, one government agency that we've been talking to, El Salvador, with their Bitcoin city, they are extremely welcoming and are inviting as much innovation into the space as possible. So, you know, as this evolves, hopefully we get more regulatory clarity. I think that's a good lead into this discussion around the implications of the executive order that was just released. Was that last week? It feels like it was a month ago, but that's, again, crypto space. A day in the crypto space is like 3 months in the real world. That's what I tell everybody. That's how fast we move. So I think it's a good lead into the executive order that was just released by President Biden last week. If you guys want to start sharing your thoughts on that, Hannah, let's start with you from kind of the legal perspective, what you see in terms of how that can either help push innovation forward or any potential initial regulatory red flags that you may have seen through there.
I actually found it really promising. I was happy that it looked like that it was both industry friendly, or at least friendlier than I think some of us had been anticipating, and also made it seem as though there might be some real guidance on the horizon, which, you know, as I thought Joseph made a really nice point that, you know, plenty of us who are trying to advise companies like you, Joey, are, you know, desperate for actual guidance. So I actually found it to be, you know, a fairly good sign. So I'll start there.
Cool. Oh yeah, and Joe, do you guys have any points you want to touch on specifically? Either, you know, obviously it is an NFT panel, so anything maybe specifically NFT related, or even obviously tax related that maybe you saw that could have potential implications, or good or bad, going forward.
Yeah, I mean, my read of the EO was very positive, similar to Hannah's. It seems that the president demonstrates that his administration understands that the federal government needs to think about the regulation holistically. It's not the division between agencies anymore of who is more important, but it's more of a broader plan that's outlined for everyone to start working on with definitive timelines. Of course, it always remains a question as to what will come out and what reports would be put in front of the leadership of the country and what would be the consequences. And so I think it's our role as part of WSBA, as part of the industry, to continue working with the regulators to educate them as much as possible on what goes on in the space. But, you know, US does acknowledge that digital asset industry is here. They are interested in ensuring comprehensive and responsible regulation, and that's fantastic. That's exactly what we need.
Yeah, totally agree. I think I agree with everybody else. I think we were pretty pretty bullish on the executive order. Honestly, it didn't, it didn't really stipulate any real regulation. It's really just gave some directions out to the agencies. And Oya, you brought up the point about sort of unifying the different agency approaches. I don't know if anybody saw, but I think over the last few weeks, the SEC had been sending out information requests to a lot of service providers, I think some exchanges, and a handful of them kind of raised their hand and said, well, hey, what's the SEC's authority here? And these information requests don't exactly feel voluntary. Like, what is our responsibility to do this? And so, like, I can only imagine, Joy, from somebody in your position in the industry, trying to follow the rules becomes really difficult. So I think for me and for most of the people I talked to, we were pretty pleased with it. I think the digital asset industry in the United States is here to stay. I think, if they wanted to kill it, they waited too long. The cat's out of the bag. It's here. And I actually think, I think, Joy, you started off with the point about the Yuga Labs funding. I think ultimately the movement of corporations into this space and the proliferation of NFTs is ultimately, to me, how we get to more favorable regulation, because, the clock is ticking until NFTs are on Instagram and they have their own token that you're going to buy and sell them with on there. And like, that's not inside info. That's my, just thought.
The Instagram just came out with that.
So they said they're going to be there. I think they're going to come out with their own token to use on their platform. And so my thought is, for all of these corporations that, write the big checks, whether it's lobbyists or whatever it might be, they're going to need, it's hard for my dad to buy an NFT because then he can't figure out how to do his taxes. And so they're going to need, the corporations will, widespread adoption to be much easier. And I think it is that force which hopefully I think leads to some more favorable regulation. Because right now it's like you said, Joey, it feels like we're working against and not with right now.
Yeah, absolutely. And I didn't have that feeling until I started talking to other governmental jurisdictions outside the US, and the tone and their welcome nature was a complete 180 to what you feel here in the US. So I'm hoping that, I think the EO, I think we can all agree, is probably the first like positive tone message about crypto that's come from congressional leaders maybe ever, besides some of the lobbyists that are in, or besides some of the unique senators that we know, Hector Pierce, et cetera, that are, pushing for crypto and Web3 adoption. I think that was kind of the first positive response. So it'll be really interesting to see kind of how this unfolds going forward. But operating, in the NFT space right now, again, it's very much like, you put what's out there and you're going to keep operating and running your business until somebody says you can't. So, and I think that's kind of the whole startup nature of the last 25 years anyways, which is when you're kind of disrupting an older industry or creating kind of a new, we're going from TradFi to DeFi now, or Web 2 to Web 3. The trailblazers have to be trailblazers, and they have to keep operating and building and innovating going forward. And eventually the regulators pretty much kind of catch up or figure out what regulation needs to be put in place to properly provide the right regulations. I don't know, Hannah, if you have any input there that you want to add. But
yeah, I think, I totally recognize that like this is the Wall Street Blockchain Alliance, so people are super focused on the SEC or other financial regulators. But I would just, like, one of the things that I think the executive order makes clear is that it's not just, they're not the only, the SEC is not the only cop on the beat, right? Like in my world, the Federal Trade Commission plays a huge role in making sure that major brands are appropriately disclosing terms to people. And I see, like, my perspective in the NFT space, particularly, is representing mostly, brands that have previously sold different types of products and are now looking to, incorporate tokens. And one of the things that, they look around and they see, like, the Bored Ape Yacht Club drop, and they think like, oh, well, we'll have, like a microsite that will have our terms on it. But like, that's not really how web law works, right? Like, you're supposed to have people actually go through and assent to the terms, and they're supposed to be like not an unchecked box, and people are supposed to, before each sale, like, understand exactly what terms apply. And that's kind of gone out the window in the NFT space. So I would just the only thing, I'm just here to say that I don't think the SEC is the only cop on the beat. And I think one thing that the executive order made clear is that I think there will probably be, you know, like the CFPB, the FTC, the SEC, you know, the commodity, like everyone is going to have to sort of have a say, because there's really implications for all the different players. And so even though, as you know, securities have gotten so much airtime, I think it's probably time that we're going to see other actors coming out from the woodwork. So.
Hannah,
Yeah,
and I think also sorry, Joe, I think
No,
also
go
places, the regulators like Department of Justice and other prosecutors who recently expressed interest with respect to NFTs because of the anti-money laundering considerations, right? Saying that NFTs are these AML prone schemes and not foolproof enough schemes, if you will, and are used to really launder money in all sorts of ways. So again, we'll see what happens.
So that's actually one of the major things that I worry about when I counsel, you know, companies like Joey's, is less the securities risk, because, you know, I think only certain types of drops have we really been worried about securities. Obviously, you know, as Joseph said, it really depends on the drop and it's very drop specific, but the KYC stuff, you know, the know your customer, the OFAC stuff, where you actually have to make sure that you're not, particularly now that we have this Russia situation, that you're not, you know, doing business with bad actors, or that you know your customer, you know who you're doing business with. That to me is a major issue, particularly if not just, you know, if you're underneath the rubric of the various laws that are at play, but you have all these companies who also, you know, take these affirmative steps to have like company mission statements where they promise to never, you know, do business with bad actors, or they promise to make sure not to do business with sanctioned countries. And like, then they drop an NFT and they have absolutely no idea, like ISIS could be buying it, right? So I think that's one of the really important things, that you make such a good point, that's one of the places that like we haven't talked about that much, but is like a major red flag to me when I'm counseling in this area. So I think it's a really smart thing to say.
Yeah, absolutely. And I know at least a lot of the companies that we deal with, and us internally as well, are, you know, as up to snuff, or as up to, you know, high level as you can be on the whole KYC AML process. That's pretty black and white in terms of what, you know, you should be implementing within your company if you're doing NFT drops, etc. So yes, at least the companies that we interact with, and our company ourselves, you know, we follow that guidance to a T. That's, you know, we feel obviously that's super important. And again, that's pretty black and white in terms of what you can and cannot do, and who you can and cannot offer the NFT drops to. So it's fairly, if you want to say, straightforward to be able to follow.
Yeah, but it's interesting because, like, obviously if you are in the business of opening a marketplace, right, you're going to think, or it's your whole business to figure out how to drop NFTs. You are going to understand that, because that's a core piece of your business model. But if you are, you know, Coke, and you want to put like 4 spinning Coca-Cola cans on OpenSea, like knowing how to gate that for KYC considerations is like a totally different thing. So it's interesting to see like the way it comes out.
Yeah, there's a niche market in NFT consulting, which is one of the things we're actually leading up at our company as well. But let's not go down that rabbit hole too much. Let's spin it a little bit. We have another 20-25 minutes, and we'll leave the last 5 or 10 minutes to answer the few questions that have come in already. Spinning back a little bit to tax considerations for NFTs and IRS guidance. Let's dive a little bit specifically into are NFTs defined as collectibles? How does the IRS view them? Are they collectibles? Are they, you know, another kind of crypto asset similar to ETH, Bitcoin, et cetera, in terms of how it's viewed, just taxed as property? What about royalties? So if you're an NFT creator, what's your tax implications or considerations around earning royalties? And if you're a you know, market buyer and seller, what royalty implications for tax considerations are there? And then the big rabbit hole, which you could have a full day discussion on, is valuation. But let's try to talk about that. I'm sure, Hannah, you have some perspective from there as well. And then any other if you want to say like financial accounting NFT considerations that you guys want to chat about. Let's dive into those for the next 20-ish minutes. Olia, I'll let you take the lead first.
Sure. Let's maybe go topic by topic, right? And first start with collectibles and have all of you chime in on this. So, okay, how does the service define collectibles? Section 408 specifies that collectibles are any work of art, any rug or antique, any metal, gem, stamp, coin, alcoholic beverage, by the way, and any other tangible property. So what does this mean with regards to NFTs? I think the previous panel has spoken about it a little bit, and they said there is this area of NFTs and only this small piece would truly be collectibles, whereas everything else has so many other use cases. And so I think we need to differentiate between two kind of main pools of NFTs: the works of art, or what is akin to a work of art, and then other types that represent ownership of actual assets or provide for experiences. I think it's pretty straightforward that the latter category would likely not fall into this collectible bucket, and so we can just leave it be for the time being. Why do we care about the works of art being collectibles? Because under the current US tax principles, any gains realized on sales of collectible items are subject to tax at a higher rate of 28%, as compared to 20% highest rate for regular long-term capital gains. And by the way, this only matters if you held that NFT for over a year, right, to get to that long-term treatment, because otherwise you're just in the same short-term cap gain bucket that's the same as your ordinary rates. And you know, when I look at the regs and at the examples in the regs, they talk about valuable baseball cards, rare comic books, you know, restored antique automobiles. So all of that seems to suggest to me that there has to be some sort of very unique, specific attributes in an NFT collection for it to be a collectible. I'm sure everyone in this group knows that if you go on Twitter or Discord, there are dozens of NFTs being minted, NFT collections being minted on a daily basis, and all of them have thousands of every animal under the sun, flower, creature, drawing, whatnot. So is it really reasonable for all of that to be swept by this big broom and be bucketed as a collectible? I don't know. My personal gut reaction is that something iconic like CryptoPunks, you know, the very first, one of the very first projects in the NFT space, that's a collectible. Bored Apes Yacht Club, that's a collectible. Everything else that I can just go ahead and mint right now, it's a bit borderline. I think it doesn't pass the sniff test of that uniqueness and but again, at the same, so the risk here is, without this proper guidance from the service, is that if, let's say, a taxpayer takes a position and files a return reporting the cap gains on the NFTs and not treating them as collectibles, they could potentially be exposing themselves to the tax underpayment penalty. And that's why it's so clutch for us to get that guidance from the IRS. Joe, and I don't know if you
you know, so I agree with like 80% of what you said, but I'm going to disagree with a little piece of it. And again, this obviously isn't tax advice. This is my personal opinion. I think they're almost never collectibles. I think if you read like the IRS guides, you said it, they list rugs, antiques, blah, 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 and other tangible property. By definition, NFTs are not tangible property. They literally do not match the words that the IRS says. They could be
any other work of art. So see, any work of art is where.
This is where I'll get nerdy on you, where I go into like, well, what are you actually buying when you buy an NFT? I think a lot of people think I bought that JPEG. No, you didn't. You bought a token, and what that token has is metadata built into it that, depending on the specific NFT you bought, either includes metadata for the artwork itself, that would be like an on-chain NFT. That's what the people call an on-chain NFT, where the metadata for the artwork is built right in. You still need software to translate that metadata and spit you out an image on your computer screen. But most NFTs are not on-chain, which essentially means what you're buying is a token that has an embedded link to it that points to a third-party server that will produce a picture of an image on a website if you call it. I mean, that's what you're buying. To me, that's not a work of art. And especially given who controls that metadata, and this does happen from time to time, that metadata can change. The people who control that NFT collection can update that NFT data if it's not on chain. So I think there's a narrow use case. You could say an on-chain NFT with that artwork metadata built right into the token. Maybe you could say that's a collectible. But to me, that's not really what you're owning. What you're owning is that token, which to me is, an intangible asset, like any other token. It just happens to be mildly unique. It's fungible. It's non-fungible instead of fungible like ETH.
So I have absolutely no dog in this particular fight, but just to say that, Joseph, I totally, that mirrors how we treat the ownership of the token from an intellectual property standpoint. So when we think about what do you buy when you buy an NFT and what do you own when you own an NFT, it is incorporeal personal property. It is ownership of the data. It has nothing to do with ownership of the underlying artwork. And that's exactly how we get into these interesting conversations about Bored Ape Yacht Club and the commercial license and all these things that people get. Is because they don't own the art. They own the token. So I don't, I'm not a tax lawyer, so I definitely will leave the tax discussion to the tax experts. But I think that thinking mirrors the way we think about ownership of the art and the token on the IP side as well.
Yeah, I think
So-
from a tax perspective, regardless of if you say it's a collectible or it's not, that's really ultimately driving the tax rate you're going to pay on those gains, right? But I think there are some important rules, no matter which one you land on, that are important, which is, when you have a taxable gain or loss. And really this applies to the financial accounting side of things, of when you have to recognize a gain or loss. And I would advise the audience to just know there are different rules depending on where you fit in the puzzle. If you're an NFT creator and you're selling those NFTs, you created it and you're selling it for the first time, that income might be treated like ordinary income. Whereas if I am not an NFT creator, I'm an NFT trader, I'm going to buy one. Whether or not I have to recognize a gain or loss on that is really going to matter of how I paid for it. If I paid for it with fiat, if I paid for it with US dollars, I will not. But if I paid for it in a digital asset, so if I paid, if I bought an NFT with Ethereum at purchase, there is a recognition event, a gain or loss. Essentially, the IRS essentially treats that you have converted that Ethereum that you're using to buy the NFT, you've converted it to US dollars and ultimately use those US dollars to buy it. So depending on what your cost basis is in that ETH that you use to buy it, you'll have a gain or loss at purchase, not just on sale if the price goes up or down. I think that's maybe the biggest thing I think folks that are especially new to the space miss, is that even when you buy an NFT with crypto, there's a recognition event there.
Yeah, Joe, so I agree with what you said. I just want to make one point to make a little bit more affirmative one comment that you made. Under Section 1221 principles, where a property is created with taxpayers' own efforts, it's never a capital asset. So, okay, in plain English, this means if you minted an NFT and sold it, that's ordinary income. It's always ordinary income to you. It's not a capital thing. It's not a capital asset in your hands if you minted it. Now, I think for individuals dabbling in the space, it's always also important to differentiate between doing it as a hobby and doing it as a trade or business. Why? Because if you're creating NFTs as part of your trade or business, you could have some additional deductions you may take on your tax return, but you're also subject to the self-employment tax, as compared to where you are just occasionally minting an NFT here or there, buy some on secondary market, sell some. Then your deductions really, you're not able to deduct the expenses incurred, but then you're also not subject to the self-employment tax. And another thing to bring up is we have this new line of businesses called digital arts dealers. It's incredible that this is even in the same sentence, but they do exist. And so where you have a taxpayer who has NFTs as their inventory because it's part of their core business offering, then any kind of sales that any gains that they realize on sales of those NFTs, again, would be in the ordinary bucket and not a capital bucket.
Oh yeah, can I ask you a clarifying question for
Sure.
my own knowledge and maybe the group? When you say if you minted an NFT and then you eventually sell it, that's always going to be ordinary income.
Mm-hmm.
When you use that term mint, do you mean like I'm the NFT creator and now I have put that out in the world? Because I in my personal life come to the NFT space as a buyer, and sometimes I use that same term. I mint an NFT, which just means I'm not the creator of the NFT. I'm just the first one to get it. So is there a difference in those two scenarios as far as like if I'm a buyer, I'm not the creator of the NFT and I mint it new, so I'm the first person to ever own it, and then I sell it, would that be ordinary income or would that be like a capital gain?
I would view that as an ordinary income event because, you're getting on a white list of some projects, for example, right? And so that gives you an opportunity to go on the website. I think in the end of the day, the IP for this? No. Did you design it? No. But you're the guy who went and pressed the button that triggered their algorithm, right, to create your pixelated fairy or you name it.
That's interesting. Yeah, that's really interesting. And I don't know if anyone, this is not NFT specific, but there's an interesting, I don't know if it's an ongoing case going on regarding crypto staking activity. Someone was fighting the IRS as far as their staking rewards. And I think it's similar to what you were just talking about. Did they create the property? Did they create those staking rewards or not? And I think a lot of people are watching that case very closely. I think the IRS settled out of court for it. And I don't believe they've commented or provided guidance on it yet, shocking. But so that's new knowledge to me, Oya. Thank you. That's
no
really
problem. Yeah.
Where do we want to go here?
Awesome.
So we can, Joey, what's next?
I was gonna say, if we want to, we have 15 or 20 minutes left. Maybe we jump into a few questions and then at the end, we can, if we want to cover any other topics that we had kind of briefly outlined before, if we have a few minutes, or we can have some fun and just talk about everybody's favorite NFTs and why they're going to buy the next Bored Ape, etc. No,
I'm going to parachute into your panel with another disclaimer that none of this is NFT investment advice or tax advice or legal advice. But we have 10 more minutes of conversation and a couple of minutes of Q&A. We can do the Q&A now. I'm happy to read those out to you. Someone did text me and I put it in the chat. Are we looking at a future where public companies hold NFTs on their balance sheets?
Oh yeah, it's already.
What does that look like?
Yeah, absolutely. It's already starting to happen. Yeah.
And what are they?
I think where you're really going to see it is when you're going to see like real estate NFTs, or NFTs related to massive like physical commercial pieces of property. I think that will really push businesses, like traditional businesses going forward that are more traditional or conservative in their investment approach. I mean, that's kind of a no-brainer, because all you're doing then is just buying the digital version or investing in the digital version of the contract, right? So I think that will eventually push all those kind of institutional players into the space. But I mean, I think the way that a lot of these major companies are innovative, the MicroStrategies, Jesus, I couldn't remember his name for a second. The MicroStrategies, Elon Musk and them, I think they'll, my company, we've bought NFTs and put them on our balance sheet. So, yeah. I mean, we're not a tiny startup, but, we're a company that is basically investing in NFTs and putting it on our balance sheet as an investment.
Yeah, and for public companies like Budweiser's actually come out with a couple different NFT collections. So they hold some, so I think that's InBev. They're a publicly traded company. This past year, Nike actually bought an NFT studio.
Nike, yep.
Yeah, so we're going to be seeing this more and more. I think it's a matter of time till, rumors in my circles are Disney's going to buy an NFT collection soon, so it's already happening. And yes, we will be there. And like Joey said, we're there.
Thank
Oh
you
boy,
all.
watch out for those big Disney lawyers, and all of the rights that you will get with those
Right.
NFTs.
Let's hit some of the questions that came in, and this came in early on the panel. How did CPAs on the panel transition to their new field, and what suggestions do you have for other CPAs who want to delve into the new technology work? Great question. Who wants to go first?
I can start off with this because I only made my move over to Bitwave maybe, just a few months ago after 12 years in public accounting. And I think the crypto space in general is amazing because I think it's a bit of a meritocracy in that if you know your stuff, most people do not care what your background is. And there's all the uncertainty we're talking about and kind of, hand-wringing about with accounting and tax is a huge opportunity for anybody who's a CPA or just works in taxes, accounting. You can literally be self-taught on crypto stuff. You can read all the guidance you can Google like heck and learn everything you can and put yourself out there in the space. Companies are absolutely going to be looking for people that are accountants, that are bookkeepers, whatever it is, in the crypto space that have crypto knowledge. And if you get in an interview and you know what you're talking about, they are not going to care that you are self-taught and that, it's really that's my story. I'm self-taught with crypto stuff like most people. I think it's one of my favorite things about the space.
Olga, same question for you and Joey. And I'm sorry, Joey, just to interrupt. And Hannah, I suspect in the legal space that there's an equivalent question. But yeah. Joey, go ahead.
Yeah.
I was going to just to piggyback off Joe. One of the reasons why nobody cares what your background is per se, as long as you kind of know your stuff or know what you're talking about, is because the whole industry is only 11 years old, right? Everybody that is in the industry came from somewhere else. Nobody that's in the industry is like, oh, I've been doing crypto for 20 years. Obviously, they're lying. Right. So that everybody came from somewhere else, which is very unique in and of itself, is that you're getting so many different perspectives and viewpoints from lawyers, accountants, regulators, entrepreneurs, whatever. Everybody's coming with their own perspective, kind of rallying around this community. So I think that's one of the reasons why, that attitude or perception of like, I don't really necessarily care what your background is. Can you do this? Yes, great, you're hired kind of thing. Is kind of pervasive or seemingly pervasive in the industry. My background, I've been in crypto since 2018, which I guess makes me a dinosaur now. My story is basically back in 2017, 2018 was when AFCPA was releasing articles like every week about how like this new thing called blockchain was going to like revolutionize accounting. I worked at a Big Four public accounting firm on the audit side and was bored one day, read the article and was like, oh man, like maybe this could be something where it becomes like an industry niche for me and I could like find a new industry to like help promote for our company. So I just kind of like went down the rabbit hole. Like 2 weeks later, came out the other side and I was like, all right, well, I either need to like start my own company around like crypto and the accounting and blockchain, or like I need to not be doing any traditional accounting anymore because this is where the whole thing's going to be like 30 years from now or whatever. I just saw kind of the future for accounting and blockchain going forward. So I actually co-founded a crypto accounting company called Gilded, helped grow that to where it was, and then got an opportunity from there. You're kind of, once you're in the space, your knowledge and the opportunities are kind of boundless. So I had an opportunity to take a role at TrustSwap and haven't looked back since.
So I still have a chance, is what you're saying, Joey, in this space.
Absolutely, Ron. You'd be viewed as definitely you've been in it earlier
founding
than
father.
me. So
I'm
founding father.
2013, and I'm starting to feel it. Olya, what's your story? And Hannah, I would love your perspectives as well. And Joey, I'm sorry, I don't mean to hijack the moderation. There's so much to cover here. I love it.
No, yeah, you're good. No, you're good.
Yeah, no. So, respectfully want to disagree with the gentleman's perspective. I also come from the Big Four public accounting. I spent 12 years at Ernst & Young, and I think the skill set, when you try to be the best version of yourself as a professional in the industry where you started, carries over really neatly into the blockchain space. Because given that there are a few notices from the IRS and a set of FAQs, it's not that there is a great deal of stuff to study and teach yourself about, right? But being able to open the rules, that the tax code and the regulations, and know how to fit in, how to analogize, how to, bring in your TradFi skill set into the DeFi space, I think that's invaluable. And I think that's what we all have carried out from the public accounting space. So it does matter to an extent what your background is, and it also matters of how well you can adjust, in the metaverse. All puns totally intended.
Anna, do you want to add a couple of comments about the legal profession and kind of moving into this space?
Yeah, I think, there are some lawyers who were sort of, OGs, foundational lawyers, thinking about, what does it mean, and I think now that it's become so much more commonplace, I actually agree with all panelists that, as long as you know your stuff and you are intellectually curious and you are sort of up to date on how the tech works, which I think is probably the biggest thing to understand, you can apply your existing legal knowledge to new facts, right? We don't really have much new law. So it's really just understanding exactly how the tech works and how to be creative in applying existing law. So
thank you all. Just a friendly reminder, hopefully everyone in the audience can stay, and certainly all of our panelists are welcome to stay. Mr. Ryan Fox will be doing a demonstration on the live creation of an NFT on the Algorand platform. It's going to be a fascinating discussion. That's happening in a few minutes. One or two more questions if the panelists are all comfortable. And I'm going to quote one of them. Previous IRS FAQs, Olya knows I love the FAQs, and I'm not even an accountant, quote, have said that in-game currencies for video games like Robux or V-Bucks is not a taxable transaction. Do you think this will change with the adoption of NFTs? Or are kids playing these games as they get older? Will this change from a collectibles perspective or bartering perspective? Which feels like a pretty deep dive into tax law right now, tax code from the perspective of NFTs. Anyone want to jump into that? You can't see it. I'm actually looking at Olya on the screen.
No,
Joey...
I'm happy to. I'm happy to. Yeah. So look, I mean, I think it depends on what these tokens will start to represent and what rights do they give a person, and whether you can sell them or not. Because right now, look, there are games where you play something, you get some sort of new skin or whatnot. Well, that certainly is not a tax event, but I mean, unfortunately, I'm not familiar with those exact games. But again, I think it all depends on where, what functionality and what rights and what, I guess, applicability would those in-game tokens have.
Yeah, I'd agree. I think there's a lot of that's going to take a while to unfold. And even when it does, every scenario, I think is going to be unique because it depends on, does that skin have value? I mean, Decentraland, wearables in Decentraland, you can sell on OpenSea for $100 even, right? You can sell a pair of random shoes that are NFT minted shoes that you wear, your character in Decentraland wears, and you can sell them on OpenSea or any other secondary market platform for $100. So it's what crosses the line of I bought this pair of shoes as a skin for my avatar to walk around in Decentraland, and versus I bought that to flip it and make $100. So, I mean, that to me, I don't understand how, well, I'm going to say that's going to be very interesting to see how that plays out in terms of determining taxable event or event around any sort of regulatory considerations around a security going forward, because I just don't see, again, you can do the same thing, I guess, technically in the physical world, right? you buy a pair of Air Jordans. I'm gonna show my age. Air Jordans from the Reebok store in the commercial strip mall, right? Which is what we used to do in the 90s because that was the cool thing to do. And you could technically then turn around and like sell them on the street, legal or not per se, and maybe make a profit, maybe not. But at the same time, like the SEC didn't then come knocking on your door and say, you just violated security law because that's a security, right? So that's where, like, to me, deciphering those differences, where it's like, just because now you're doing it in this digital version versus doing it physically in your neighborhood street, it's going to be interesting. That's all I'm going to say.
You just inspired me to dig out my old Reebok high tops from the 80s.
Yeah,
Hopefully
there you go.
I could do something with those.
See, right?
I'm going to make this let's leave that as the last question. Again, for all of the folks who dropped in questions, we'll respond to them online. Happy to reach out to the panelists. Joey, with your permission, maybe give everyone on the panel kind of the last word and their closing comments, and then we bring up Mr. Fox to do his demonstration. But Joey, do you want to kick off on last word and kind of takeaways?
Sure, yeah. If you guys want to provide your takeaways and then the fun fact of what maybe your favorite NFT or first NFT that you bought, my takeaways are, it's an ever evolving space. And if you can just keep up with from either a legal side or an accounting side, kind of how the space is evolving, you're going to be positioning yourself quite well, no matter what current industry you're in. If you're in public accounting, or if you're not in public accounting, whatever, I would say, just learn about it to understand what aspects and considerations affect you going forward and where it can go. And my favorite NFT, which is a no-brainer, is the WOWs that I purchased. And I will thank my wife for that, because she happened to be scrolling on Twitter when the news broke that the guy that was the PR rep for Bored Ape now became the PR rep of WOW. And within about 5 minutes, we scooped up 3 of them, and we're in a very nice position. So I will say WOWs.
I don't know if this is investment advice on the power.
None is it? None. Yeah, none.
Joey, please share a link to that.
All your parting comments, and we'll go around the horn for the rest of our panelists.
Yes, of course. So I think if we compare this panel to the Titanic approaching the iceberg of NFTs, we literally just it's whatever fell on the on the floor is what we've covered. And so much more is left above the water, leave alone the giant piece under it, because we didn't talk about what to do with expenses, we didn't get to withholding taxes, we didn't get to trade or businesses, we didn't get to royalties, and there's just so much more. What happens if you fractionalize NFTs from tax perspective, et cetera, et cetera, et cetera. So I would say I'm excited to be in the space. I am really excited to be a part of WSBA and collaborating with all of the incredibly talented and smart professionals. And my first NFT that I purchased was a Cryptoad, which was wonderful and pixelated. And I sold it for a small gain far too early. And then it went up to 20 ETH.
Oh, ouch.
Never complain about profits, though.
I know. I've learned the term paper hands just right there and then.
Yeah.
Thank you, Olya. Joseph, you want to go, and then Hannah, we'll wrap it up with you.
Sure. Well, so I got a comment. Oh yeah, I got a Cryptoad too, and I'm still holding my Cryptoad. I wrote it to the top and all the way back down. I'm a bag holder. I'm still holding. I think what I tell people, from an accounting and tax perspective, that focus, truly my hope is that we're in like the dark ages right now, that it is the hardest right now, and that it's going to get easier. I do believe that. I don't know if it's going to get more favorable, but I do think it will get clearer. So in the meantime, I just, I tell everyone, I caution everyone, just know there's probably a rule or something you need to know. Whatever you're doing, and this applies to, NFTs, crypto, DeFi, there's probably a rule. Work with a tax accountant, get an accountant that knows what they're talking about. They're probably worth what you're paying them. So it is, I love the space. I'm every day, I'm impressed by the big brains that I meet in the space, including all the people on this call. And my favorite NFT, not as well known as the Cryptodes or the World of Women, is Anonymice. That is an on-chain NFT. It is my Twitter profile picture. Anonymice is my favorite NFT. That's what sent me down the rabbit hole originally, and honestly, is probably why I'm sitting here today. It's kind of wild.
Interesting. Joseph, thank you so much. Hannah, you're gonna end us off.
Okay, so I'll start by saying I agree with the World of Women being my favorite NFT project. So there's not that much originality there, but I think I also completely agree with Oya that we didn't even scratch the surface. I mean, for me, my area of expertise and what I usually bring to the table is discussing the intricacies of, you know, what types of rights you have in the art or potential digital asset that you're going to sell, and what types of rights you're giving to your community, and how you communicate all of that. And so I just think it shows exactly what Oya said, that there's so much to think about. And I agree with Joseph that having, you know, much like having a smart accountant, having a smart lawyer, who will also tell you that they don't do everything. Any lawyer that says that they can do the IP, the securities, the money transmitter issues is not a lawyer you want. So that's it.
Anna, Olya, Joseph, Joey, thanks for jumping in from a moderator perspective, Joey, as well. I'm so grateful for all of you on behalf of all the attendees, on behalf of the Wall Street Blockchain Alliance. You're our family, and it's a privilege for me to know you and work with all of you. I'm going to end the panel there for us. I'm going to give us a couple of minutes and bring Mr. Ryan Fox on board to do a demo. Hopefully you can all stick around, and I'll be chatting with you all soon. Thanks again.
Thank you.
We're going to bring Mr. Fox on board.
Let's get this going. All
Mr.
right.
Fox, I am sorry, but like every good event, we're running about 5 minutes late.
Not a problem.
Great panels, great discussion. I know you've been with us since we went live, so I'm really grateful for
Yeah.
that. I'm going to let you share your screen. I'm going to get my face off of camera, let you walk through the demo.
Right.
If you're comfortable, we'll carve out some time for Q&As after the presentation.
Absolutely. Let's do it. All right. Well,
Oh,
let's get it going. All right.
all
Let's make
yours.
sure I share the right screen and put this thing in the slideshow. Well, hello. Good afternoon, everyone. My name is Ryan Fox. I am a developer advocate at Algorand, and this is a little bit about how to NFT. So the last couple of hours, if you've been with us here, you know, we've kind of seen the what is it, and the how, and the why, and this time we're going to get into the how. So here you've got a little bit of before Web3 and then me as Web3. So that's me with working at the bank before I got into blockchain stuff in 2013, mined my first Bitcoin back then. And here I am today working at Algorand, connecting with innovation teams, connecting with developers, and teaching them all about building smart contracts, building smart NFTs, and doing that on the Algorand platform. And of course, if you got your phone handy and you want to connect with me, that's how you can find me on Twitter. I am Ryan R. Fox, and of course, at Algorand as well. So what are we going to do today? So this is all about, you know, how to. So normally I'm out there and I'm speaking to developers, and we go into the code deep about how do you actually program a lot of this stuff. I think this is a know your audience moment here. I'm going to keep it more at the tools level, using some of the established tools that are within the Algorand ecosystem in order to mint an NFT. So a little alliteration of what we're going to cover here today is going to be components of an NFT, the creation thereof, and then we'll talk about the commerce aspects of it. So actually moving that around, and we'll talk about royalties. Of course, there will be time at the end for Q&A as well. So the components of the NFT, and the panels before this did a very good job of speaking to those. But when I think of NFTs, I think about broadly about four different components of that. And first and foremost, it's that ownership piece. Second of all, and probably what we think of, at least visually, right, or is the media. What is the piece of digital art is kind of the canonical representation of what an NFT is. But then there's these other pieces that may or may not be there, but these are the rights that are associated with the NFT itself. And typically at least the second and third things on this list are wrapped up inside of the metadata. So those are the four components, broadly speaking. If we think about specifically about ownership, this is all taken care of by the blockchain itself. You know, this is really the core functionality of what a blockchain is able to do, to prove who owns it now, and then of course to demonstrate that ownership history of who has owned this digital asset in the past. And that is the key piece of information that we want to really understand about NFTs, is that it's all about ownership. It isn't about that right click, save JPEG file. That will come a little bit later. When we think about that, the media, you know, what type of NFT are you trying to represent? Is it truly the digital asset where it is a piece of artwork? Maybe it's a song. It could be any type of media that could be digitized, but it could also be a physical object. So we talked a lot about the sneakers, right? Nike selling both the physical sneaker and then tying together with it an NFT that then has some provenance along with that. And as those go through the market together, those ensure, you know, the authenticity of the physical object with a digital token as well. And the next piece that we want to talk about when we think about what are the components are going to be the rights. And these are not always contained within every NFT, but more and more we are thinking about including them within the NFT at creation time, so that owners know what is being conveyed to them for copyright, for licensing purposes, any of the derivative works that they may want to use with them, and then of course commercial use rights. Many times, and especially the OG of these NFT projects, they didn't include any of this. It was perhaps not thought of, or it just importantly, none of those copyright and licensing were conveyed then to the current owner. Now we're thinking more about rights, and we'll show how you can put those into your creations. And the last piece is the metadata. And really what the metadata is this wrapper. This is taking all of the information about your particular NFT creation and referencing it elsewhere. So the blockchain is very good at identifiers and at consolidating a lot of information using fancy mathematics, a hash function, right? To take this big chunk of data that we can represent typically in a decentralized file system off of the blockchain, and we can then use a hash function to make it only 32 bytes long, very small, and we can stuff that into our NFT at creation time, and then we can reference it out there so that somebody can then say, I see where all of the detailed information about this is referenced someplace else. And what the types of things that are going to be referenced are going to be like the attributes. So if we think about, well, you saw my my alligator that was that I had shown earlier, right, where it had a background and it had, of course, different eyes, or was carrying different things, right? So those various attributes can be represented in there. And then we want to then also talk about the mutability of the metadata itself. Many of the NFTs that have been created to date have been immutable, meaning that once they're there, they cannot be changed. And moving forward, many creators are thinking about, well, I do actually want my NFT to evolve or to level up. You know, think about having a sword within a game, and as you use it, it gets more experience, or it can change colors or do something, right? So to have that non-fungible token actually mutate as it progresses through gameplay. And the important thing to think about and certainly as an owner of one of these NFTs that may have mutable properties, is to think about, well, how can that metadata be changed, and who or what has the power to do that? Is that the original owner of it, who just can at will change the eye color or change the power of your object? Or is it embedded within a smart contract itself, where we know exactly how this object can change if it moves through the gameplay as such? All right, so those are the components here that we think about. So let's jump into the creation now and actually do some demos. All right. So I'm gonna talk to you about the Algorand ecosystem, and we've got a site here, ecosystem at algorand.com, and we've got all sorts of things that are NFT specific, but I'm gonna focus down here on some marketplaces that that you may want to take a look at if you were going to create your very first NFT. And you can go to algodesk.io. You can connect a wallet onto a testnet where you can get free tokens, and it's very easy for you to, in a couple of clicks, just create a brand new NFT by filling in the blanks here, uploading your file, and deciding how it is that you want to do that. One thing that I'll talk about, and we heard other panelists talk about standards in the Ethereum space, and of course Ethereum is really where the vast majority of this work has been done with NFTs and standards, and we hear a lot about ERC20, ERC 721, and ERC 1155, and newer ones going forward. In Algorand, so we have something called ARC, which would be an Algorand request for comment. So we have a couple of different NFT standards. One is ARC 69 and one is ARC 3. Just different ways in order to display or to encode your metadata as you would want to define it here. And then, of course, we'll see that you could put in some key value pairs here to describe what your, in this case, rocket looks like. So let me take you to a different one here, and I'll move this out of the way so that I don't accidentally end us. I'm going to take us over to abris.io. This is a site where I have actually started to create my dev rocket. So I have created a collection here. So I have made my first collection of dev rockets, of course, because that's my, I'm a developer advocate. That's what everything's got to be, a dev something, right? So this is a collection of rockets. Of course they're going to the moon. That's what we do here in crypto, right? So I'm going to show you how to build another NFT, put it on sale, and then we'll go forward and purchase it. But some things that I want you to understand about this is that I created some various attributes, right, to define or to describe what my NFT was all about. So here we have the ship, the tail, and the background. So in the background, you could either have stars and moons. These are all stars. The tail came in red, white, and blue. And then the ship itself, the body of the ship, came in gray, red, and white. So any combination thereof, when we're creating that, is what we want to describe. So let's take a look. And importantly, I defined all of those attributes ahead of time. In this case, I am making my NFT immutable. It cannot be changed or evolve in the future the way that I'm going to design it here. This is fairly, I guess, old school, right? It isn't as exciting, or it isn't as smart. We won't call this a smart NFT. We'll talk about that a little bit later. So let's take a look at minting an NFT within this collection. So here we just have a simple form that asks us to decide what it is that I am doing. I am taking, I'm going to do digital art. So I'm going to grab this image here that I had done earlier, and this was, I can actually show you. So if you take this image here right now, I can select this color here, and I can decide that I want to change it just to be red. So now I have a red body and I have the red fins. So I could actually export this file here, and operation not permitted. Well, let's hope it's permitted. Otherwise, we're just going to do it there. So we're going to export the red one. And here we go. All right. Now, when we come back over here to mint the new one, let's change. Let's do the one that we just did, the red. Doesn't have any contrast. It's kind of ugly, not as pretty as the other ones, but all right. So let's make this rocket number 5, and we are going to stick this into our dev rocket collection. And now here we see the properties that were defined earlier. So for the ship, we're going to choose red. For the tail, we are also going to choose red, and for the background, those are stars. So we will do that. So now we have selected each of those properties and the attributes for each of those here. You know, we could put in a story about it, right? To the moon, something easy. Maybe you would want to talk about conveying rights of this NFT to the owner, if there was something that you wanted to do, or we could have define that earlier on within properties here as well. For this, we're just going to mint this. This will take just a handful of seconds here on the Algorand blockchain, very fast. Blockchain or our block intervals are only 5 seconds, so that's really easy. So basically what this is showing here, it's bringing up my wallet, and it's showing me that I have an account here, and it is saying that you want to create this asset called rocket number 5. All you have to do is sign that transaction, and it will, the transaction itself looks like this. Yay. It has this JSON file here that shows that it is using the ARC69 specification, defining all of this information, the description, everything that you saw before, and it's writing that here into the blockchain data. And when I sign the transaction, it will come back here in about 5 or 10 seconds. And we will see that we'll have now a 4th rocket here. So it has now minted this red one. So the next thing that we might want to do is put it on sale so that somebody else would be able to purchase it. So what I could do here is click on it. And how many do I want to sell? Well, I only have 1 available, so I will sell that one. And my selling price, let's, you know, I'm not Beeple. I'm just Ryan Fox, so it's only worth $1. But we are going to mark that one for sale. And we're going to sign that transaction as well. And so it gives us some request to review what this transaction is actually doing, and it gives us some, you know, it says which asset identifier, who is it from, so that's me, and then it has these attributes here for a couple of different accounts, and it gives these addresses over here. Some of them are mine, the reserve accounts, because I am the creator, and the clawback is this other one that starts with Lima Juliet Alpha here. And this is the way that in Algorand we are controlling by a separate smart contract how this asset is going to move after it has been made for sale. So another smart contract will control this particular asset. All right, so here we go. Yes, I have reviewed it and I'm going to approve it and sign it. And what we will see within this interface now is that it is also on sale. So I have 2 that are on sale and 2 that are not on sale. So then that is, quickly, how do you build one? And then the last part of the presentation is on the commerce side of things. And we think about, well, how do we actually interact with these? How can we purchase them? How can we become the owner of this? So in my other web browser, where I have a different wallet and a different account, I am going to bring this one up here. And so keep this out of the way. Okay, so this one is using Firefox as opposed to Chrome, so it has a different wallet associated. But let's go search for it. So let's go search for all the rockets that are here. Actually, I think it's just rocket. Oh, there are 4 assets. Here they are. And here it is, rocket number 5, the red one. That's on sale. Now, if I am interested in purchasing this one, I'm going to click the buy button. I guess I have to click on it before I can buy it. Now I'm going to click the buy button. Here we go. And it's going to ask me to, again, look at a couple of transactions here for my review. Now, interestingly, in the Algorand way of doing things, the receiver, the purchaser, right? I have to opt in to this asset identifier. And this is a spam prevention mechanism within the Algorand blockchain. Nobody can just send you a bunch of crap. You actually have to tell the blockchain that you are interested in holding this asset, because in fact you have to pay a small balance to hold that, because you are now going to hold some data within your account about it. So that's what this opt-in is about. It's saying, yes, in fact, I do actually want this asset ID, and then we are going to see that I am going to be sending some amount to this address, and I'm going to be sending more than because remember the price was just 1, so it's charging me extra because there was some royalties to be paid as well. So we will sign this transaction, and then we will see that this has now been sold. And it is now my digital asset that is sitting in this in the portfolio of the second one, right? So we only see that one asset now being held here. And if we were to go and take a look at the Explorer, where we could see what happened in that transaction, we would see that that there were those 2 transactions that were happening where I was opting in for an amount of 0 that doesn't cost anything but the transaction fee, and then here were the transfer amount that was going to the the escrow account so that I could receive it into my address here. So it was coming. The asset itself was coming from the account, the escrow account that the Abris website had created for me, and it's sending it to the Mike account, which was the account that is here, and within this wallet here. All right, so that is very, very quickly how to create an NFT using the Algorand blockchain, or on the Algorand blockchain using Abris. There are some other ones that are out there. This is another one called Zestbloom. This one's kind of fun because they actually do a bit more with royalty pieces as well. So we can within this one, this is actually going to go on to the test net, and I guess I would encourage people, if they want to start doing things, you can start doing things on testnet, because Algorand gives away free tokens there, and it's nice and easy for you to get started. So if we put right here, if we're going to do the rocket number 6, and we're going to call it token of ARC-AT, right? And of course, we know that it's to the moon, right? And we are going to do a graphic, and we want to upload that same file, right? And put in, so now here it's asking about royalty. So as the creator, I can determine what percentage royalties I want to have on this and future sales. And this asset, once it's created, then every time that it is resold would then give me back 10% as the creator. And so they have a way that their platform can manage this asset, or they can allow me to manage it myself. And then of course they have a way for that sales structure to work, either simple or safe. Safe again is if Zestbloom, if this site is going to manage it as well, that they would take care of all of that. So there, and I can publish it, right? So we'll publish it publicly, and we have to sign this transaction, and that should be that one. Good. And then ultimately we will be able to see this one, and we'll take a look at the way that royalties would work on future sales. So we can now decide, here it's indicating, you know, the net amount that I would receive, because there is a, right, because we have that royalty of 10% put on there. So we can either do it as a sale, or we can skip this and we could put it, we could put it into, I wanted to put it on sale as an auction, because that would be another way to do that. So, well, trust me, that's what you could do. Is it this one? I clicked the wrong thing. We'll come back to that. I'll go into a little bit here. This is really, you know, what I do is within the Algorand developer portal. We have, if you are a developer, this is the place to go, developer.algorand.com. We talk about tokenization. We've got some great a series with Alice and Bob that talk about how to create NFTs. It gives great code samples here. And this is the stuff that is being hidden behind the scenes within those wonderful little like these create things here, right? So instead of just going through and filling out it in a nice wizard here, what we're doing here is actually doing it within transactions, and we're putting in the name of the address, and we're putting in the URL to the decentralized storage to define what our metadata file looks like and all of this. So if you're a geek, this is the stuff that you want to do. And we have it available in Python as well. And there are these really nice examples here where we have Alice, who is an NFT creator, and she wants to work with her friend Bob, who is a smart contract developer, and she creates the NFT, and he helps her write a smart contract, which is an auction, and then they deploy that code together, and voila, out comes Alice creating her NFT and getting it sold. So again, that is everything happening at developer.algorand.org. So I think that is essentially what I wanted to show in a whiz-bang fashion here. And I am going to hit the stop share button, because that is about all that we want to see there. Ron, have we been just inundated with questions?
We had some questions coming in, Ryan, and that was a great presentation, great overview, really grateful for it. And I think you actually answered them in flight. One was about adding the royalty, and I suspect, I mean,
Yes.
each one of the wallets, each one of the those access points, it's a different interface where you can enter that royalty, but there is that ability to bake in a royalty, correct?
Yes, there definitely is. And each of those different ecosystem partners will have a different way to set up and manage that. One thing that I failed to talk about with Zestbloom, which I think is one of their strong selling points, is that they're using off-chain AI in order to watch when new NFTs are created. They're looking for either an exact reproduction of, or a scaled down version of, or even a derivative work thereof. And they are trying to protect original creators from having somebody else put up a fake one there. So so that's what's really interesting there about using off-chain AI in order to help make a great marketplace where everybody could feel safe about interacting within it. Because of course, at this point in time, that's a lot of just buyer beware. Make sure you know who you're buying from, right? Make sure you know who that creator is.
That is true. We had one more question. I think you might have answered this in flight as well. I'm sorry if I'm misremembering. Is there a test net for Abris? That there is, correct? Or,
yes, yes, there is. I believe yes, there is. Yes, and I'm almost positive that it's testnet.abris.io. I think that all of the platform, all those ecosystem partners have test nets available. Again, Algorand have a dispenser to give away those testnet tokens so that you can get in there and start building on it straight away. And we have USDC deployed on Algorand as well, so you can also get the USDC coin on the testnet as well. So lots of great opportunities for developers or creators, artists to get up and get going quickly.
Ryan, really appreciate it. I think that's it with questions for now. For anyone who does have additional questions, please certainly drop them in the Q&A. Ryan, I do want to digress just a little bit. And one of the reasons I'm doing this is we share this with members through our newsletter, and any folks who are not members should become. But the Algorand developer portal, can you talk a little bit more about that? I think you mentioned it a couple of times, but I guess for those trying to understand what's available there, and the NFTs are important. Algorand's a pretty big platform with a lot of offerings. I thought it might be an opportunity to just say, here's what's available on the developer portal.
Well, thanks for the opportunity. Yes. I mean, Algorand as a layer 1 protocol, what you're finding at our developer portal is everything that you need in order to get building smart contracts and NFTs quickly and within your web browser. Like, we have code samples where you can click to run, you can copy paste if you have a developer environment set up. So we have all the tools available there for you. Plus we have articles, solutions, tutorials that can walk the developer through. And you don't have to be an existing developer. I should say, you don't have to be an existing smart contract developer. We are going after the developers who are out there in enterprise today, who are crypto curious, who are wanting to apply their knowledge, be it in Java or JavaScript, Python, or Go, with what they're doing in their day job at the bank or wherever they are, and be able to apply that then to crypto, to DeFi, to NFTs, and we'll hold your hand and we will get you building something cool relatively quickly.
Ryan, thanks so much. I think we're going to leave it there. I want to thank you so much in the Algorand team. We have been talking about, and Barry and I have a conversation going on about doing the more technical deep dives, even things like hackathons. So would love to have you part of that discussion as well. So that rounds it out for this event. Ryan, again, thank you for all of our attendees who joined us. Thank you again very much as well. This event is being recorded. We will make that recording available to members within a week. And I think a week or two after that, it becomes publicly available. So happy to have you share that all. If anyone wants additional information about the WSBA, please email us at info@wsba.co. But I am going to end it there. Thank you for being part of such a great event, Ryan. Thank you for all you do. Take care, everyone. Thank you for joining.
Thanks, John.
Bye-bye.